Let's go make some money, shall we? I'm going to take my cherubic face off the screen. You don't need to see me, but I wanted to let you know I am a real person. All right, everybody, let's get going here. All right, so everybody uses stochastics. It's on every chart service in the universe, but the reality is nearly everybody does it wrong. And I'm going to prove that to you today. But then what I'm going to do is I'm going to turn it around and show you two very profitable techniques on how to use stochastics, one of which I know you've never seen before. All right, let's get going and head on to our next let's go to our next slide here, if I can get it over there. There we go. All right. So those are the things that we're going to cover today. We're going to explain what stochastics are, how they're normally used, why that is a disaster, and how to really use stochastics to make serious money. So just a little bit of background about me. Morningstar ranked my mutual fund that I ran the #1 mutual fund in America, most profitable. I ranked the #1 global macro hedge fund in the world for 3 years in a row, the #1 stock newsletter for 5 years in a row, #1 gold and bond market timer, author of 10 books on trading, and I've taught over 1 million people the trading techniques, including some of the ones I'm going to teach you today. So I've been trading for 50 years now. This is my 50th year as a professional trader. All right. Stochastics aren't important. What do we mean by that? Well, there's no point learning a new technique if you don't use it. This is the important thing. Many people, they learn a technique and then they end up never using it. And what we see in the trading world is that many people are technique junkies. They'll learn a technique, they'll have 3 losing trades in a row, and they say, this doesn't work. But you've got to use these things. You can't just talk about them. Second point I want to make before getting into my presentation is that the psychology of investing is the most important part of investing. If you're an experienced trader, you're nodding your head yes right now. I know that for a fact because every time I give a speech, I ask that question and all the experienced traders say, yes, it is the hardest part of trading. So focus on that. Techniques, of which I'm about to teach you, really, well, you'll see. Risk management, the second most important part of investing. Once again, more important than buying and selling decisions. If you get those 2 right, you're going to be a winner. Entry and exit rules are the least important. Now it's weird, but that's what I'm going to teach you today is the least important stuff. But we always have to remember that the most important part of investing is between your ears. Okay, what are stochastics? I won't go into this in detail because you can find it on the internet. It is really perhaps the most popular indicator on charting services. Maybe moving averages are, but it's incredibly popular. Williams percent R is basically the same as stochastics, only turned on its head. They're inverse of each other. So here's the definition of it. You got that? You got your pen and paper ready? Look, you can find it on the internet, so I'm not going to waste any time on that. The key is, now, I learned, let me go on. It's generally credited as being invented by George Lane. And I had the opportunity to work with George Lane before he died. So I got exactly how he traded stochastics. And he claims to have invented it back in the late 1940s. And I'll never forget it. He told me the way that he uses it, which I'm going to teach to you in a few minutes. And he said, quote unquote, it's damn near infallible. That's his quote. But Larry Williams, who's been a friend of mine since the 1970s, Alan Davis or Ralph Dyston might be the inventor. Larry says that Alan Davis was probably the inventor. So who knows? Who knows? I don't know, that's for sure. Okay, math facts about stochastics. Most chart services look back at least 14 days, but there's a lot of services that can also do 9 days. And obviously, whichever one you use is going to affect how you use stochastics. So one of the most critical things to think about when you're trading stochastics is to figure out what term you're going to use. Now, I'm just going to use the standard 14 days in my discussion here. So if you're a short-term trader, you're going to want to use shorter number of days. For example, I use 2-day for my swing trading. But for my position trading, I use 14 days. The number of bars is related to the cycle length. Once again, we don't have time for that. All right. So here's a really old chart service that doesn't even exist anymore. But down at the bottom are the stochastics. So we have the price chart up at the top, and then underneath that, way down at the bottom, you can see the stochastics. And you can see there's two lines there. A solid line, that's the percent K, and then the dotted line is the percent D. So remember, in the formula, we're smoothing the data, then we're smoothing it again. So the percent D is the smoothing of the percent K. Okay, that's a very quick, and I admit, very quick explanation of stochastics. But I really want to focus on how you can make money using stochastics. So here's the usual way. The usual way to use stochastics is you sell on a downside crossover when stochastics are above 80. Now, the thing to remember is that the scale on stochastics is between 0 and 100. With 100 meaning that it's closing on the high of the day for every day for 14 days. So that's extraordinarily rare. And 0, it's closing on the low of the day for 14 straight days. Because really the stochastic just measures where in the bar the market's closing. So if it's closing in the top half of the bar, well, that's bullish. And if it closes in the bottom half of the bar over the last 14 days, that's probably bearish. So we'll come back to that in a minute. I'll show you a technique on how to make money with stochastics that nobody uses. Now, but a lot of people, the most common way is take a look there right under the word stochastic. And you can see that the dotted line, which is the percent K, crosses down over the solid line, which is the percent D. And most people use that as a signal to go short. Then if you go over about an inch, you can see the percent K crosses back up above the percent D. Those would be two classic indications of first selling and then buying. And people like to do it when it's above 80 or below 20. Now, there's a concept in stochastics of right-handed and left-handed crossovers, which is another thing that very few people look at, But all of the people I mentioned, George Lane, I mentioned Larry Williams, they also look at left-handed and right-handed crossovers. So let me tell you what that means. Let's go back to that first crossover, the one by stochastics. And you can see the peak of the percent D, that's the solid line. And then you can see that the percent K crosses over the percent D on the right-hand side of the percent D. So in other words, it comes after the peak in the percent D. That's a right-handed crossover. And that's considered to be less powerful than a left-handed crossover, which would be where it crosses over to the left of the peak in the percent D. Now, once again, most of the time, nearly all the time, it's a right-handed crossover because these are smoothings of smoothings. So something has to have happened violently in the market to get a left-handed crossover. But a left-handed crossover is always better and more powerful signal than a right-handed crossover. So when you look at the stochastics, look at where it crosses, where the percent K crosses over the percent D. If it crosses on the right-hand side, whether it's up or down, it's less powerful than if it crosses on the left-hand side, which is a more powerful indicator. Why? Because it means something big and violent has occurred. And usually if the market moves in a big and violent manner, that's a signal you got to be paying attention to, okay? All right. Now, what I just showed you here, selling on a downside crossover, buying on an upside crossover, is a huge disaster. You can do all the back testing you want, and you'll find that that's a money-losing strategy. That's a money-losing strategy. And the simple reason is this. The market will cross over. Let's go back to that very first crossover when the market is rallying higher. The stochastic is going higher. When you see the markets, when you see the stochastics get overbought or above 70 or 80 and then cross down, that's what people want to do. But guess what? If the market continues higher, you've lost a lot of money. Like, where do you put your stop loss? Because what happens is the biggest bull markets in history, the biggest bear markets in history occur when stochastics are overbought or oversold. So, so then Jake Bernstein said, well, let's do the opposite of that. And he back tested and what he called the stochastic pop method. And that was, well, if it gets to above 80, let's buy. If selling when it gets above 80 is a big loser, well, then buying above 80 should be a big winner. No, that wasn't either. The key, though, is where do you put your stop loss in those situations? But when you have a big bull market and you have a little move down, the stochastics will cross, you'll get short, the big bull market will continue and start another leg up, and you'll be stopped out for a big losing trade. So the normal way that people use this technique simply does not work. And please go and back test it so you can confirm it yourself. Anything I say, you should back test and confirm for yourself. So the real question then is, if this doesn't work right, oh, now let me ask one other thing. What about in a trading range market? What if the market's going sideways? Well, then this technique can kind of work, but you can't make big money at it, because if it's in a trading range, by definition, there's no big trends. And I like trading the big trends because the big money's made on the big moves. Now, I'm also a swing trader and sometimes a day trader, and I don't mind making a little money if I can do it lots and lots of times, right? But the easy way to make money is to make the big money on the big move. But let's see if we can do that. So here is actually a study done of percent K crossing percent D with period lengths of 1 to 24. And you can see that there's a zero line across the middle of the chart, and except for stochastic periods of about 21, all the rest of the crossovers were money losers. And of course, nobody uses a 21 period stochastic. Does it work? Part two. It can work in trading range markets, but it loses a lot in trending markets. All major bull and bear markets have overbought, oversold stochastics, as I mentioned. But here's how you can use it. Let's say that you're in a big bull market and the market takes a dip and the stochastics cross over and give a bear signal. Don't take that signal. Don't take that signal. But eventually, in a big bull market, the market will turn around and start to go back up again. In other words, the trend will resume its bull market. Guess what? When the stochastics cross back up in the direction of the major trend, that is a good entry point, and you have the bottom of the dip as your stop loss. That is a profitable technique, okay? Let me repeat it. Big bull market, stochastics overbought, market dips, we get a downside bearish crossover in the stochastics, don't take that trade. The market then turns around and starts to move back in the direction of the trend. You can buy when the percent K crosses the percent D and put a stop loss at the low of the dip. That is a profitable trading technique. Okay. That's profitable trading technique number one. I'm actually going to give you, I guess, 3. Let's keep going. I've got a lot, so I'm talking fast, and I apologize for going fast, but man, I want your head to explode when we're through here, okay? I want your brain to be stuffed with a lot of information and a lot of profitable trading techniques here. What about crossovers in the direction of the trend? Well, the zero line is right across the middle, and there you see tremendous profitability on this back test. I didn't do this back test. It was a couple of Finnish researchers, I don't know, but I like to use other people's back tests because it confirms, it doesn't confirm my bias. So much, much more profitable than if you go against the trend. What I find is, as I said, I've taught over 1 million people how to trade around the world, all around the world. And the biggest problem that most people do is they try to fight the trend. Always, always, always just go with the trend. If you get a signal that tells you to go against the trend, ignore it. I don't care what the system is. There's very, 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 very few counter trend techniques that make money. Okay, but I faked you out. Those were charts of monthly stochastics, okay? But you can make a tremendous amount of money using stochastics on the monthly stochastics, all right? Because that's going to get you the big money on the big move. So I wanted to kind of blow your mind there a little bit to start looking at stochastics as a monthly or weekly indicator, not just a daily indicator. It can get you going. Now, the same concept of using the stochastic crossover in the direction of the trend works on daily charts as well, okay? But always use multi-time horizons in your trading. All right, who cares? We just don't want to do counter trend. All right, now let me talk about how I really use it day in and day out. These are the two ways. I've already showed you one way. Now let's talk about two more ways to make money. I'm going to go into a little bit more detail on these. I'm going to slow down a little bit. This is a simple technique that nobody uses. Buy when the percent K crosses the 50% line and the weekly close is higher than last week's close. Now, the chart on the left shows that kind of profitability. And you can see every possible combination is profitable. Every single one of them. On the right-hand side, every combination except 9 days is profitable. If the 10-day or higher percent K crosses the 50%, buy. If it crosses to the upside, you buy. If it crosses to the downside, you sell. Now that's the whole system. That's profitable. And it's been profitable for decades, all right? So that's a simple trend following technique. And we know that over time, trend following is probably the best and easiest way to make money. Let's keep trading simple. Let's keep it easy. Trading's not hard. We make it hard as traders. But here's a simple technique that's proven to make money year after year after year. All right. So in particular, around a 40 day period, so a percent K of 40 days, not 14 days, 40 days, now you're talking about making some pretty darn good money. In this case, on the right-hand side, about 80% on average, 80% per year. Warren who? You see what I'm saying? So this is a simple technique that makes a lot of money over time. But if you use any type of long-term period to use in your stochastics, you're going to be making 40% or more. That's a lot of money. You compound money at 40%, you don't have to start with very much, and you're a millionaire pretty darn quickly, like in just a few years. Start with 10 grand, you're a millionaire in a few years. So start thinking about stochastics with longer periods, like 14, not 14, but 40. And then if the percent K crosses the 50% line, buy. So this is really kind of a long-term trend following system. All right, works great. And the cool thing is nobody's looking at this. No broker's going to pick off your order because nobody's following 40-day stochastics on their charts. Nobody, zero. You and me will be the only two people that are doing it. So we'll gobble up all that money while other people are fighting it out over 14-day stochastics or 9-day stochastics, and they're all putting their trades in at the same price at the same time. Let the brokers pick them off. We'll be sitting fat and sassy out at the 40-day stochastic. What I'm trying to show you is there are great indicators out there, but you have to be creative at their use, or else you're competing with other people. Why compete to make the money? Why compete? That's just hard work. I like making money easy. This is a very easy way for you to make money. Very easy way. All right, let's carry on. Any questions on that? Because if you put questions in there, I can answer them over in the question box. Okay, because I'm going fast. I know that. Slow me down if I'm going too fast. All right. Here's the equity curve if we did 39-day weekly stochastics. That's a sweet equity curve. The first part was not too profitable, kept on making money. Very, very good. Here's the stats. I won't go into that, but it's very, very profitable. All right, let's see here. Before I go to my next one, let me answer a couple of questions here. An example. All right, that's easy to come by. Joe, you got to ask me harder questions than that. Okay, let me go back. I'm sorry, everybody. I'm going to go back and I'm going to go get a chart of stochastics. So right here in the middle of the chart is the 50% line. So when the percent K crosses the 50%, you buy there. So at the end of the day, you look at the chart, you see that there's that it closed above the 50% line, and so you buy. And then over here, the system says it goes below the 50% line, you sell. Now that's the whole system. Now, I don't trade it exactly like that because I always have to have in my systems, I have to have a stop loss point. So you could do something like the most recent significant low would be your stop loss point, something like that. And then because you always have to control risk, because as I said, the second most important thing in trading is risk management. Number one is psychology. Number two is risk management. But you can see one of the cool things with this technique is you're catching the big move. You're catching the big move. Here, not so good. Here, this is the bad news. We got a little bit of a whipsaw here, but then the market started to move down. We made back the loss on the whipsaw and then went and made some more money. So this, you can see this is a little sample of how it all works in the real world. All right, let me try to catch up to where I was. And I got another question here, sorry. We'll go fast. Okay, let's see, another question here. Okay, this is a great question from E-Trader. Do you use 40 periods on all three settings? No, you use the 40. What happens is the percent K looks back over 40 days, and then the percent D is the three period moving average of the percent K. So that's kind of how you look at it. It's just the first element is 40. Okay, active trader. I think I just answered that. It's not a 40-day moving average of a 40-day moving average. It's a 3-day moving average of that one. Okay. All right, let's go on, and I want to teach you another technique. Just a second. Hang on. Okay, I've been very skeptical. This is from Member Trader. I've been very skeptical about trading with the stochastics until now. This is great. I'm looking at SPY, the daily chart, 5 years. I could have made a lot of money. I wish I had done this 5 years ago. I swear to God, listen, I've been trading for 50 years, okay? And one of the things is, of course, is that when you do this for 50 years, you get punched in the nose a lot. And you find out that the commonly accepted wisdom is nearly always wrong. And so, Member Trader, I completely understand what you're saying, but I've had the opportunity. I've worked for some major institutions, so I've been the research director of 2 brokerage houses, so I've had a lot of money in order to examine a lot of these things. So one of the keys here is that you go back and you say, well, is 14 the right thing? Should the percent D be a 3-day moving average? In other words, I could go back and examine every single element. Now, when I started in the early 1970s, everything was by hand. You know, we drew our charts by hand, and things like that. So that was a different game back then. Yes, you're right, Murugan V. All right, let's go on to another. And by the way, I'm sorry, one more thing, member trader. You've been very skeptical of stochastics. You should be skeptical of everything. As I said, I don't want you to believe a word that I'm teaching you here today. I think the key is you look at this idea and you say, okay, I hear what you're saying, Courtney. Now let me go back test it myself. And member trader, you just did a quick back test on SPY for the last 5 years, and you saw it was very, very profitable. And I think that's really the point. When you trade, remember I said the psychology is the most important thing. If I teach you something today that's incredibly profitable, a lot of you on this call, you're sitting there going like, I don't know, who is this guy? Who the hell is this guy? I mean, and this idea of 50, crossing the 50, what the hell is he talking about? I don't know about this. Everybody's going to have doubt, and you should have doubt. I want you to have doubt. And you shouldn't trade just because I teach something. I have tremendous credentials. Nobody has the credentials that I have. Literally, nobody has those #1 rankings that I have across every asset class there is. Stocks, options, futures, Forex, it doesn't matter. I trade them all. But the point is this. You sit down and you say, even though Courtney has all these credentials, you still need to back test it. You still need to test it yourself. Not because you won't come up with the same conclusion I will. You will. You'll find out that it's very profitable. But here's what you'll do. You'll have greater confidence, and therefore you'll actually do it, and therefore you'll actually make money. You need to not trust me for psychological reasons because it'll force you to back test it, and your own back testing, seeing it work with your own eyes, will cause you to want to do it. Just listening to me should intrigue you and should make you want to back test it. That's all I want you to do, because then once you do it, you'll say, oh man, as member trader said, I wish I had known this 5 years ago. Exactly right. Exactly right. Okay, member trader says it seems too simple and effective to be true, but I can read charts after 10 years. And that's the thing. I have found, I used to run 42 concurrent systems, all computer generated. And it got to be too complicated. And so I actually threw them all out and started from scratch. And I said, how can I make them simpler and more robust? Simpler, fewer, simpler. Now, am I giving up some profit by not running 42 systems? I am. But if you use the 80-20 principle, I'm now doing 20% of those systems and I'm making 80% of the money, and I have lots of time all day long to do whatever I want. So to me, I'll take that trade-off every single time. I don't need to maximize profitability. I need to optimize profitability. And optimizing means I have to take into the account the costs of creating that additional money, which is my time. And that's the biggest cost of all for all of us. All right, let's go to another technique. Divergences. I'm going to go a little slow here too as well. What is a divergence? The market makes a new high, but the stochastics don't make a new high, or the market makes new lows, but the stochastics don't make new lows. So that's a simple statement, but people, I'm going to have to go a little slow here because sometimes people don't look at the chart the correct way. So I want to show you that in gory detail. Now, this is how George Lane uses stochastics, and he says it's damn near infallible. That's a strong statement, but it's pretty darn good, okay? All right, so let's take a look right here, and I'm going to go a little bit slow because I need you to really look at this. Where's my cursor? There we go. Okay, so I've drawn lines when the divergence occurs. So, for example, right here, the market makes a little rally up, okay? And it closes on this high right here. And when you trade stochastics, you look at closes only. You don't look at the high of the bar or the low of the bar. You only look at the close of the bar because stochastics is based on the close of the bar, not the open high or low. So here's the high close right here. We look down here, we see here's the peak in stochastic, the percent K. We then come over where the market takes a dip. There always has to be a dip for a divergence. And then we wait and we see where's the next time that the market made a higher close. Well, that's this bar right here. The market made a higher close on this day right here, okay? So these days we ignore. So on that day, we then look down and we say, is the percent K higher than it was on the previous high? And the answer is no. So the price is making a higher high, the stochastics is making a lower high. Now what's happening? That's an indication that the market is running out of momentum, that the bulls may still be in control of the market, but that the bears are coming in more forcefully all the time, that the bears are mounting a stronger counterattack compared to the bulls. So what should we expect? This is a daily chart. So what we should expect is this. I'm going to make a statement. Please write this statement down. It's a simple one, but it tells you what's going to happen with, I don't know, 90, 95% accuracy. My statement always on the daily chart is we will see a peak in the price in 1 to 5 days, most likely 2 to 3 days. Okay, in this example, we can see that the price, we go 1, 2, 3, 4 days later, the market peaked and dropped sharply. So this stochastic divergence worked. Let's go to the next example. And I'm not using dramatic examples. I'm using normal examples that happen all the time, okay? I could cherry pick great examples, but then it's fake. I need you to see reality. So here we make a high. We look down at the stochastics. Now here's an interesting one. So we then go make a higher close and we go down and we look down here. Now what people do is they'll see, well, the peak in the percent K was slightly higher than the peak in the percent K over here, so there was no divergence. But you actually have to look on the first day it breaks to a new high close. This is where people make a mistake on divergences. When it first broke to a new high, it was still below the peak over here. Okay, it was still below the peak over here. It then continued higher and I think barely made a new high. But at the moment that it made a new high in the price, that's when you look for divergence. So we see divergence here. So my prediction is we're going to see a peak in prices in 1 to 5 days, most likely 2 to 3 days. And it turns out, once again, it was 4 days we made the high and the market dropped sharply. Now, when I did this chart, we saw another divergence and it looks like the market was starting to drop at this point. Okay. Now, this is daily stochastic divergence. As a position trader, I find this to be almost useless. Okay, I mean, who cares if the market drops a little bit if I have a long-term position on, right? It drops a little bit, cute. Drops a little bit, drops a little bit. But the reality is I don't care about that if I'm a position trader. A position trader is looking to hold something for weeks or months. So I don't care about that. Now, what if I'm a swing trader or a day trader? This is really useful information. This is really useful information, okay? Because it's going to tell me what's going to happen over a short period of time, a short period of time, a short period of time. As a position trader, I'll just wait out these little swings against me. As a swing trader or a day trader, this becomes incredibly powerful, all right? Now, let's take it another step further. This is a weekly chart. This is a weekly chart. This is where the incredible power comes in, is on the weekly chart. Once again, now we're looking at divergences at a time frame that nobody looks at. So let's take a look. Here's a simple example right here. Here's the high close. I'll pick this one in the middle. Here's the high close. On this week, we made a new high close. We go down here, we can easily see that the stochastics are much lower. So what's my prediction now? Now I'm going to get dramatic. Once again, I'm going to say we're going to see a peak in the market. 1 to 5 weeks in the future, but most likely 2 to 3 weeks. Now, here's the difference between a weekly and a daily stochastic divergence. With a weekly stochastic divergence, I then say, I'm not looking for a drop in the market. I'm looking for a major counter trend trade or a major trend change. Okay, that's a much more dramatic statement. So this is a boring stock. This is just General Motors doing nothing. But here we come in here and we can see the market has a pretty significant move down 1 week later. 1 week later. Here we have a little mini divergence. We see here's the low. We then make another low. The market pops up a couple of weeks later. How about this one though? We make a low. We then go make another low, and here's the day we make the new low. The market continues down. Remember, my prediction is the market's going to make a low in this case because it's a bullish divergence in 1 to 5 weeks, most likely 2 to 3 weeks. 3 weeks later, we make the low, and that is a major move. That's not a major counter trend move. That is a major trend change. And now we're talking about a price that goes from like $15 to $55 in General Motors, okay? So this is the kind of trade that's available to you. In this case, we just made a divergence, so I don't know what happened, but I would anticipate that we'd see a significant move down and maybe a major trend change down. So I really focus on the weekly charts like a laser beam. And what I do is in my chart service, I put it up there. I got my daily chart, I got my weekly chart right next to it. I've got my stochastics down at the bottom so I can see if there's any major divergences. If there's a major divergence, how do I get long? Let's take a look at this big one here. How do I get long? I need a daily signal, right? I know this market's going to turn around. I know it's going to turn around. But now I need some other technique. It breaks a channel, it breaks a previous high, you know, whatever the technique is, it doesn't matter. But I need something on the daily chart to get me long somewhere down in this area here. But man, I'm alert, I'm ready. And the second thing I do, I put on double-sized positions. If I would normally buy 100 shares of General Motors, I buy 200. Because if I have a weekly stochastic divergence, I know I'm going to have a big move. So if I know I'm going to have a big move, I want to have a big position on to make the big money. This is how you have the #1 mutual fund in the country, is by strategies like what I'm telling you. You find what the context is. You create a context. The context of buying General Motors as the market is plunging is that we have weekly stochastic divergence. If that context is bullish, then on bullish trades, I've got to have a much bigger position than normal, because the environment is bullish, even though the chart looks terrible. And if the market doesn't rally up a lot, I'm never going to get long, so no harm. It doesn't matter. If it just keeps plunging, and we're now at 8 weeks, I stop looking at stochastic divergence after 5 weeks. I say the signal failed. Guess what? I don't lose any money if the signal fails, but I can make a lot of money if it works. So this is part of one of my themes of trading. One of my principles of trading is what's the context or the environment that the trade off of the daily chart is, and one of those environmental factors is stochastic divergence. Works great on the weekly chart, can make a lot of money. On the daily chart, not very interesting for a position trader, but very valuable for a day or swing trader. Okay, now, this is another example here on the S&P. I mean, you know, I got a nice dip here, ended up with a gigantic 1 year bull market here, had a big bull market here. I mean, these are great examples, but you can see them easily if you go look at a weekly chart. The key is to remember that the first in this case, the first higher close is the day you look at the stochastics. That's the place that everybody forgets. It's not the high of the bar. It's not the low of the bar. It's not where the stochastic ends up. It's at the day where I get the first higher close. Okay, daily versus weekly. Let's wrap this up. Very different meanings. Daily means a short-term counter trend move. Weekly is a major trend change or major counter trend trade that's very, very tradable and profitable. Okay, so let me wrap up some stuff because unfortunately I'm running out of time. It's a very, very powerful technique if it's used correctly. You can use it as a standalone trading technique when it crosses the 50, but use a longer term stochastics. Best used as divergence. Daily is good, but weekly is unbelievable. That's one of my core techniques that I use to, alt-best rank my global macro hedge fund, the #1 performing hedge fund in the world 3 years in a row. So that means I beat George Soros. One of the reasons is because I'm using this technique in particular. All right, now, I've got a special bonus for you. We don't put this publication out anymore, Stock Profits Journal, so I'm not selling it to you. I'm going to give it to you, okay? So please pay attention very closely. I'm going to give you something for free. What is Stock Profits Journal? Well, it doesn't matter anymore because we don't make it anymore. It was a monthly print publication. It explains specific proven profitable processes, back tests to prove that it worked, examine common techniques to see if they work, make them profitable. Anyway, in the very first issue, we looked at stochastics. So what did we do? Well, we have dozens of pages of unique, deep profit. By the way, this is not for sale. So please, I'm not trying to sell this to you. I'm giving this to you. I want to show you how valuable what I'm giving is to you. Complete rules for profitable trading systems, interviews with famous traders. Are you ready for this? I interviewed George Lane. I interviewed Jack Schwager. I interviewed Tom DeMark. I interviewed Larry Williams. I have all these interviews with famous traders of how they use stochastics. I give you the complete rules for all the techniques and methods. It's insights from my 50 years, my hidden secret ways to turn unprofitable systems into profit machines. This is a technique that nobody uses but me. I can nearly always turn an unprofitable system into a profitable system. Academic studies as well. Here's more about it, okay? I reveal the secret techniques I use, the nuclear option technique that will instantly improve just about every technique, neurological discoveries that change loser traders into money-making machines, okay, once again, psychology. I don't care if you're a swing trader, position trader, because I'm both of those myself, how your twisted mind is sabotaging your trading and making you a loser and how to snap out of it. Unsexy but profitable systems that just make money in the most boring way, and how to trade news. How's that? Not bad, okay? All right. I don't want to go on to this. You got the idea. This is really an amazing issue, okay? Now, I'm going to give it to you for free. I don't want anything from you. I got everything I want, okay? So just text the word stochastics to that number or email support@wealthbuilderllc.com. One of those two things, that's wealthbuilderllc.com, and we'll send it to you for free. That's it. Got nothing to sell for you. Just giving away free stuff. Let's see. While you're doing that, I've got another person here. Can we use this for Forex? I use it for Forex every single day. You can use all these techniques for Forex. Joe says, thank you very much. I really appreciate and respect your experience and success. I'm struggling with back for success. Yeah, for sure. That's common. Trading micro futures with MACD. Looking forward to the success. Read this publication and I'm sending it to you, okay? MACD is great. I know the inventor of it. I've known him for 30 years, Gerald Appel. He's retired now. MACD is another great technique as well. Stochastics, RSI, MACD are roughly the same thing. So, they're roughly the same thing. Here's stochastics. I use stochastics and RSI. I use RSI for a couple of other trading systems that are pretty unique. Yeah. All right, let's see. Any other questions here? What about RSI divergences? Same thing. Same thing. Use the same techniques. Okay, same techniques. Works exactly the same. That's why I say, I think stochastics might work a little bit better, but they're basically the same. They're basically the same. Trader says, thank you for an excellent presentation and the free info. Listen, I've been trading for a long time. I'm now at my stage in my life that I don't have to compete with anybody. I'm a professional trader. This is how I make my living. So I can afford to give away stuff because I'm not trying to, I don't need to sell you anything. I got my money. I'm good. I'm good. But I started teaching a few years back in order to sort of pass forward the information that I have based on my 50 years of trading. Let's see. Rajesh says, I heard that slow stochastic is a leading indicator. Is that correct? It is if you use the divergence technique. That's the key there. Member Trader says, thanks, Courtney. I'm so glad that I could join today. All the best to you, James. James, awesome. I hope you take all this stuff and go make a lot of money with it, all right? Be sure to text that information or send us an email, whatever's convenient for you, and we'll send you out that. It's a print publication, so we're going to have to mail it to you. How's that? Okay, we went old school on this publication. It's print, so we will send it out to you right away. All right. I see. Where can we get more teaching about this concept? I'll tell you what, Rajesh, order this issue and I'll send you some emails on some of the courses that I teach. Okay. Z Jones says, you are one of the most trustworthy presenters ever. Thank you. Z, I can't tell you how much I appreciate what you're saying there, because as a professional trader, I have to be reality oriented. And when I teach my students, I really want them to be reality oriented. So we always have to look at what's the good news and what's the bad news. Every technique has bad news, and we have to know what it is, because we have to psychologically prepare for it. We have to use risk management to prepare for it. No technique is perfect, but we want to try to find excellent techniques. And that means we have to have an open mind. We have to be reality based. In my courses that I teach, and I do sell them, but that's one of the most saying trustworthy. That's really important to me, because so many people are hype artists. You know that. Everybody knows that. So I don't want to be one of those people. Okay, let's just put it that way. Marugan says, thank you so much for your time and valuable information you shared with it. It's my pleasure. Rajesh says, I like your attitude and respect it immensely. Well, thank you very, very much. How do I reach you? You can send an email to me at support@wealthbuilderllc.com. I read them all. Rajesh says, I'm sick of the salespeople. Tell me about it. I know that for sure. I get them too. Can we see this webinar again? Anna said at the very beginning that they're recording this and it's going to be sent to you. Active Trader said, spent too much money on the hype artists. I hear you. I hear you. Okay, Rajesh, if you could send that information to support@wealthbuilderllc, that would be great. Okay. Member says, God bless you, coach. Oh, thank you very much. I appreciate that. Okay. All right. That's good. Trader. Thanks for your knowledge. God bless. And I think, Anna, I've run out of the questions.
Thank you so much. We just got some urgent news from Tony. She won't be able to participate today. So if you want, you can take the rest of her time, or we will bring the other presenter and ask him to do the presentation earlier for us.
Well, I don't want to intrude on anybody else's time. So why don't we do this? Why don't you ask the next presenter if they're available, and if they are, great, you can move up your schedule, and I'll keep talking, okay? Because I have lots to share. But just let me know, Anna, and if the next presenter is ready to go, then I will stop. But
yeah,
let
sure.
me keep talking about this, okay? All right. Let's see, another question. Mr. Jousef, are you sending the recording? I believe that Investors Expo will be sending you a recording of this. That's what she said at the very beginning. Rajesh says, forget the rest, stay with this gentleman for the whole day. Well, I appreciate that. I appreciate that. Trust me, I could talk for days. All right. So let me change subject there. I've given you some hardcore techniques, but let me talk about what I think are the most important things in trading success, and that's psychology. What I find is that trading is easy if you let it if you let it be easy. If you let it be easy. Um, I do a little bit of coaching, but I've done a lot of coaching in the past. And every trader is their own biggest enemy because they make it complicated. So, for example, I just taught a couple of profitable systems. There's hundreds of people on this call. How many of those hundreds are going to actually make money using the technique? Very few, maybe 10, maybe 20. That's all. Because most people are going to be lazy. Most people are going to say, no, it can't really be that easy. Most people will start to trade it, and after 2 losing trades, they'll say, see, it doesn't work. In other words, all of those are self-sabotage. What you need to do is you need to take a technique, back test it first, see if on paper it works, and then start to trade it on paper going forward, or trade it with a really, really, really small position, like buy 1 share of General Motors. Do you see what I'm saying? So you have real world experience with the psychology of actually trading, okay? Because actually putting money on the line is way, way, way more important than paper trading. Even 1 share messes with your mentality, if you see what I'm saying. Hey, since I'm not sharing, I'll put the webcam back on. So the key is you need to get the real world experience. You need to then test it. So you look at it and you say, most people, they get a couple of losing trades and then they go, oh, this system doesn't work. The better thing is to back test, and then when you have 2 losing trades in the real world, you go back and you say, how many times did I have 2 losing trades in the last 5 years? Oh, I had 20 of them, so this is no big deal. Let's keep going. You see what I'm saying? You need to ground yourself in reality as much as possible to overcome the psychology which we sabotage ourselves with. And why do we sabotage it? Let me give a really good example of something that I did. I used to teach a class which was totally for futures and Forex traders. And I taught these particular methods to, I don't know, maybe 1,000 people. Actually, it was more than that. It was probably closer to 2,000. And then I'd say to people, I'd talk to my students, I'd say, well, you know, how did you do trading it? I'd talk to them 3 months later, 6 months later, and they'd say, well, I never really traded it. Well, why not? Why didn't you trade it? And they'd say, because I was afraid of losing money. I'd say, what? When you go to a movie, are you afraid of losing the $10 to see the movie? No. Well, then why are you afraid of losing the $10 trading 1 share of General Motors? The reason is that people are not afraid to lose money. They're afraid to lose their ego. Now, what does that mean? We've been taught since childhood to not make mistakes and to always do the right thing. But here's the reality. So when you're a child, you get spanked if you start to cross the freeway. We get into school, we get an F if we make mistakes. We get a job, we get fired if we make mistakes. We go to church, we go to hell if we make mistakes. Do you see what I'm saying? So our whole life is we're taught not to make mistakes. In trading, mistakes are called losing trades. You're going to have 1,000,000 of them. You're going to have 1,000,000 of them. Get used to it. But you have to change your mentality from not being afraid of making mistakes. You have to start thinking of yourself as you're the casino, not the gambler, which means that sometimes you're going to have losing trades, sometimes you're going to have winning trades, but after 100 trades, you're going to be taking all the gambler's money. The different psychology that you have to have. Let's see. Sorry. Natarja, I'm going to send you a free copy of the Stock Profit Journal for free, all about stochastics. All right. What do you think about using it on 1 minute and 5 minute charts? I don't really recommend that. I wouldn't go below 1 hour on this technique. Wouldn't go below, I wouldn't go below 1 hour. Sorry, I'm just checking here. I'll answer questions unless somebody, okay, all right. So that's the first and most important thing, is getting the psychology right. Backtesting is a great way to build confidence to get it there. The second most important thing that you can talk about is risk management. And I use a technique, I use 2 techniques, but my core technique is called fixed fractional. And what that simply is that on every trade, I risk a certain fraction of my bankroll. So let's say I have $10,000 in my account and I'm willing to lose 1% of my account on every trade. So that means that the maximum loss that I can take is $100. Okay? Now, if I lose $100, I've lost 1% of my account. So now my account has $9,900 in it. Well, what's 1% of $9,900? It's $99. So on my next trade, I'm only allowed to lose $99. So where I enter and where my stop is, the number of contracts or shares or whatever has to be, it can't be more than $99. I can't lose more than $99. That's a strict rule with me. And what that means is that if I go down to say $9,000, now my next trade, I'm only allowed to risk $90. So if I go into a losing streak, my losing trades get less and less, right? They get less and less because the less money I have in my account, the less I'm allowed to lose. I'm still only losing 1%, but the dollar amount gets less and less. But if I start to make money, each trade starts to make more and more money because I get bigger and bigger positions. So if you combine a profitable trading system with the fixed fractional risk management system I just gave a very short outline on, you accentuate, your income grows geometrically. So on the downside, it flattens out. On the upside, it accelerates up. This is using mathematics to power your risk management. All right, I've just given you two key concepts, and I could literally speak for hours on both of them. Work on your psychology, work on your risk management. Then worry about trading techniques. Another aspect of that is this. What if my psychology is all screwed up? I'm never going to be a winner. Never. I'll sabotage myself. I'll find a way to sabotage myself. Let me give an example. I said I don't do very much coaching, and I don't. But I have a program. I'm not selling it to you. I'm not going to tell you what the deal is, but because it's incredible, but I'm not going to pitch it. It's called the Trader's Apprentice Program. And basically, it costs $35,000. So this is not a cheap program, okay? But I coach you until you've made $35,000. So it's actually free. But you got to have $100,000 in your account. So this is not for everybody, this program. Okay. I have a person in my TAP program, my Trader's Apprentice Program, and last year they're a stock trader, and now they're learning futures and Forex. In the stock market, they ended up losing money. The big bull market we had last year, they ended up losing money. Not a lot, a little bit, like 5% of their account. So I'm really frustrated. So what I always do with my coaching clients is that I sit there and I say, let's go through every trade. And what he was doing is he was accentuating short trades, bearish trades, and had hardly any bullish trades on. So I said, wait a second, Chris, is this a bull market or a bear market? And he goes, a bull market. I said, why are you fighting the market? Make trading easy. Go with the market. Do what the market tells you to do. Don't fight the market. So after we've had that, he's starting to make money again because we're still in a bull market. It's not as explosive as it was before, but now he has way more buy orders than sell orders, but he still wants to do short orders. Why? Because most traders' motivation is to be right. It's to be able to say, I'm really smart. I beat the market. Guess what? My motivation is to make money. You need to examine deeply whether your motivation is to make money or to be right. If your motivation is to be right, you're going to lose money because it's going to cause you all kinds of problems. My job is to make money. That's it. That's my job. I'm a professional trader. My job is to make money. It's not to be smart. The market doesn't give me money if I'm smart. The market doesn't give me money if I'm correct. The market gives me money if I do what it tells me to do. I do what the market tells me to do. Bull market? Yes, boss, I'll buy. Bear market? Oh, no problem, boss. I'm selling. I'm selling. That one simple insight can change your trading. Do what the market tells you to do. In every technique that I showed you here, all we were doing is coming up with an indicator to see what did the market want us to do. And then we did it. That is one of the most important keys for the psychology of trading that you can possibly imagine, okay? Please look at your trading and see if you're doing what the market tells you what to do, or if you're trying to be right. Your job is not to be right. Your job is to make money. Okay. Where do you think we are now? Bull or bear? This is Aggie member. In the stock market, it's clearly a bull market. We're making all-time highs. There's no question it's a bull market. Now, in the stock market, remember, there's some sectors that are in bear markets and some sectors that are in bull markets, but the overall market's bullish, so your portfolio's got to be mainly long positions. I have short positions, but they're small. My biggest positions are long because it's a bull market, and I only do what the market tells me to do. Yes, sir, boss. Yes, boss. Okay? We're making higher highs, higher lows. We're making all-time highs. That's the definition of a bull market. Let's not get crazy here. What do I use to identify the trend? Are we making higher highs and higher lows? It's a bull market. Are we making lower highs and lower lows? It's a bear market. And you know, about once a week we make a new all-time high. That's another indication it's a bull market. Let's see, I'm down in the last 2 months. So you're probably going short, not long. Like I say, let me give another example. This is Forex. I have a very small group of people that I coach on Forex, and we get together at 4 o'clock Pacific time, and we go over the trades. So, you know, the pairs are often highly correlated. So euro yen, euro pound, euro US, they all have euro in the name. So guess what? They're pretty highly correlated. So a lot of the people in this little group, they'll go, well, euro yen was really strong, so I bought euro pound because it will catch up with euro yen. No. Here's another one of my principles of trading. Buy that which is strongest, sell that which is weakest. So if euro yen has been the strongest, you buy euro yen. If euro pound is the strongest, you buy euro pound. In stocks, if Ford is stronger than General Motors and you want to be in autos, you buy Ford. Buy that which is strongest, sell that which is weakest. And so it could be too that you're buying that which is weakest. In other words, you're buying General Motors when Ford is going up and General Motors is going sideways. So take a look, examine what your trading is to see if that's what the problem is. I think what Member Trader is saying is they're losing money even in a bull or a bear market. So first of all, have good psychology, have good risk management so your losses are small. And now you can go back and say, take a look at some of the techniques I've taught you here today and change those entry and exit techniques and start to make some money, okay? Joe says, so very helpful. Thank you, Courtney. I am determined to earn even a fraction of your success, trading on-off 20 years and retiring this month after selling software 25 years. I'm so very positive and motivated. Well, that's great, Joe. Need a system that does have great probability in your opinion overall. My core technique is channel breakout. Channel breakout. That's my core technique in every asset class. 55-day channel breakout there. I've revealed it to the world. Now, there's a lot of little rules in futures and Forex. We have some additional rules in stocks. It's pretty much the 55-day channel. It's really nothing. Joe, send me an email there at that email address, and I can help you out. Yeah, I don't really scalp at all. When I work for big institutions, I did that all day long. But now as a private trader, I don't do that because I don't have access to as good information, and I like going out, taking a nice walk, sitting in the sun, having a social life. You see what I'm saying? So I can't really help you on scalping. Day trading, I do that a lot. Member says, do you look at weekly charts each day or only once a week? As I mentioned again, what I mentioned earlier, remember, is that on my chart, if I brought up my charts right now, you would see a daily chart, but right next to it would be a smaller weekly chart. I'm looking at it all the time. Now, in the real world, the weekly doesn't change my opinion of the daily very often, but when it does, it's a big difference. It's really important. Like that weekly stochastic divergence, that's it. I'm focused on that market because there's going to be a big move coming up. And the big money's made on the big move. So I got to get that big move. You see, as a professional trader, my job is not to beat the market. My job is to make money. Why? Because I want to eat steak next month, not oatmeal. You got it? I have a very unusual lifestyle. I live in five-star hotels. I don't have an apartment anymore. I don't have a house anymore. Why not? For 7 years, I've been living in hotels because I travel the world. I go all over the world because I love travel. I love different cultures. So, and then what I do is I'm not as dumb as I look. I'll teach a class there and I make it all tax deductible. Pretty cool, huh? So this year planned, I've got classes I'll be teaching in Dubai, Singapore, Kuala Lumpur, Bangkok, Los Angeles, Orlando. Those are coming up this year, but I think we're going to add some more, possibly up in Europe as well, maybe in South Africa. So I travel the world, so what do I need an apartment for? So my lifestyle is expensive. It's expensive. So I need to make a lot of money, so I focus on how to make big money. I trade everything. Joe asked, am I trading futures or forex? I trade them all. I trade futures, forex, options, and stocks, and I've written books on all of them. Um, so, and they're all the same in my mind. They're all the same to me. I mean, a lot of people say, "Oh no, stocks are very different from options." Okay, options are a bit weirder, but stocks, futures, and forex, they're all manifestations of people's psychology. That's all prices are. So the same principles apply in all markets, which is why my hedge fund was mainly futures and forex. My mutual fund was only stocks. You see what I'm saying? Number one gold and bond market timer. Well, that's bonds and precious metals. So I don't really care what the instrument is. The techniques underlying everything is exactly the same thing, which is human psychology. All markets are human psychology. Thanks very much for continuing on. It is inspiring and refreshing to hear you speak. Well, thank you very much, member trader. I think that trading is one of the easiest things in the world and one of the hardest things in the world. But the parts that are hard, I gave a speech in India, 4,000 people. And I said, I don't know what any of you do for a living, but I know that intellectually, what I do for a living, trading, is much easier than whatever it is you do. And I don't know what you do. But I told them, I said, but I also know that what I do for a living is psychologically much harder than what you do for a living, and I don't know what you do for a living. Okay, if you were an air traffic controller, that's probably psychologically more difficult than what I do as a trader. But not many jobs are more difficult psychologically, but intellectually, it's trivial. It's trivial. My book on Forex trading, I'm not selling it to you, reveals several extremely profitable techniques for trading Forex. There you go. That book costs 45 bucks. Okay, so the intellectual part of trading is done. It's done. Okay, it's cooked. Stick it with a fork. The hard part is the psychology of trading. I think you'll agree with me on that. Do I believe in seasonality? I do. My very first book, which was written in 1979, was on seasonality. Okay, so yes. But look, seasonality works great in some things. It works badly in other things. Let me give an example. We just made a lot of money in December. Platinum has rallied in the month of December 29 of the last 30 years. 29 of the last 30 years, platinum has rallied. So what do? We bought SPPP and we bought platinum futures. Made a lot of money. Works at 29 out of 30 years. That's pretty good track record. So yes, seasonality can be very good. A lot of instruments, there are seasonalities 50-50, 55-45. I don't really pay attention to those. But if I get around something that's 75% reliable, I start to pay a lot of attention. Trader member says, do you play with earnings? Currently, I don't so much. In the past, I used to do it all the time because I was a huge option market maker. And the implied volatility goes up into the news and then comes down. And so I played earnings that way. In terms of playing earnings, I guess I'd say yes, I do, but not. I don't spend my day waiting for the earnings announcement to come out. The way I look at it is this: if this company has beat expectations for the last 4 quarters, the odds are 80-90% that they're going to beat it this quarter as well. So that's how I usually look at earnings. Natarja, I've lost most of my earnings of 2020 in the month of March by dumping big margin money. Do you send buy sold options? If yes, what's the program structure and the fee? I'm not sure I quite understand this, but let me try to understand it. And Natarja, if I don't understand it, please correct me. Do I send, I think what you're saying is, do I send out buy and sell recommendations on options? Yes. We have 3 programs called the Navigator programs, one for stocks, one for options, and one for futures and Forex, where I put out I'm actually give you my portfolio. I actually tell you exactly what I'm doing. And the way it works is you get sent a text and it says, I'm going to buy dollar yen or I'm going to buy General Motors. And then once I send it out, then I put on the trade for my account. So I put it on at the same time you do. So that's an extremely popular product, as you can imagine, because you're basically getting all of my trades before I do them. But the futures and Forex one is not available to U.S. residents. Okay, all of them, stocks and options are available for everybody in the world. Futures and Forex are not available for U.S. residents. Aggie member says, come to Toronto and give a class. I actually lived in Canada for 13 years. Went to university in Canada, went to high school in Canada, met my first wife in Canada. I have a lot of ties to Canada. But first of all, they won't let Americans go to Toronto right now, so I can't go. Hopefully they'll open it up and we can do that again. Aggie member says, are you teaching Forex? Yes, indeed. I have spent so much money with blah, 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 blah on EAs, which never work. Yes, we have a course. Once again, it's not available to people living in the US. It's available for everybody else. We have a couple of courses and the Navigator program. See, you're turning me into a salesman. I didn't come here to sell. I came to just teach, but you're asking questions, so please. Okay. Stocks, is dividend yield important? Now, that's a really deep question. Dividend yields over the long run represent like 30 or 40% of the total return of the stock market. If you're a trader, they're unimportant. If you're a swing trader, a day trader, I wouldn't pay any attention to dividends. I'm a position trader and I don't pay any attention to dividends, even though they represent like 30 or 40% of the total return of the stock market. Now, the reason is because I'm not going to be holding them for years and years and years. In my retirement account, I use a dividend strategy because those are stocks that I can't really sell them very often. I can't trade them. I have to invest in them. And in those cases, I do invest in dividend stocks because I can't trade them. Okay. So if you're investing for the long run, like a retirement plan, I think adding dividends is a really good idea, particularly if it's in some type of a retirement plan where you don't have to pay taxes on the dividends. In a regular trading account, you're going to probably have to pay, at least Americans have to pay taxes on the dividends. So that makes them less attractive. So yeah, I use them, but I don't put those out. The numbers, trader, you get a free copy of my Stock Profits Journal all about, by the way, I didn't tell you, that issue sells for $97. If you wanted to buy that issue, you'd have to pay $97 for that issue. All right, all the rest of you who gave me questions, I can't answer them now. We need to go to our next speaker. But send your questions to me at the email address on the screen, and I will answer all of your questions, all right? Because I don't want you to go home without your questions answered. I want you to take this information and go make a bunch of money.
So how's everyone doing today? Let me quickly thank Anna for inviting me back to one of these wonderful speaking engagements. I always have fun with your events, Anna, so thank you. I'm on location. You'll see in the lower right-hand corner, the Backpack Trader. That's my logo, and it pretty much is a symbol for absolute freedom that you get from trading. And as I tell you my story and a little bit more about myself and show you one of my favorite strategies and how and why it works, you'll start to see how I've come to be known as the Backpack Trader. I'm not going to steal my own thunder yet, though. Just a little hint as what's coming your way. But just so you know, you don't have to schlep a backpack all around to be successful. And whether you want to trade from the Siberian Express or your own sofa or anywhere in between, trading gives you the ability to call your own shot. So it's really important to get it right. And can we all agree that it's important to get trading right because of what it can do for you in your life? It's a good place to start psychologically to come to that realization and then be sure that you do what it takes to get it right. So could you guys do me a favor? I know there's a lot of you in here today, which is really exciting. Could you please type into the chat where you're from, where you're tuning in from? Because it's always interesting to see where everybody is from. It's a big world, but a very small trader community. And hello, Dallas, Texas, another Texas, Belgium, SV, not sure where that is, Myrtle Beach, Houston, Minneapolis, Florida, Norway, Canada, Louisiana, Washington, D.C., Toronto, Savannah, Mexico, Nigeria, Papua New Guinea. Imagine that, Papua New Guinea. Welcome, Papua New Guinea. New Caledonia. This is awesome. Do you see what I'm saying? India. Hi, India. Long Island. Awesome. So let's get started, you guys. It doesn't matter where you're from because the markets don't care. You could push a button, place a trade, and make or lose some money. Morrigan says, hi, Troy. Hello, Morrigan. Kenya, South Africa. I mean, if we hit all the continents, I think we might have, except for Antarctica. All right, let's get started. So, as you know, trading is risky. Don't risk money you can't afford to kiss goodbye. All right, we're not going to kiss our money goodbye, but if you could afford to kiss it goodbye, you'll probably be able to remain unemotional and execute your trade plan with more efficiency. Just realize that past results do not indicate future performance. All right, we all know this, but it's important to remind ourselves of this every day so we make smart trading decisions. All right, so that's me. I was a lot more handsome when I was younger. I've been trading for 28 years, maybe longer. I haven't changed this slide in a while. These are some of the things I've done. I've, ran out of space, but it's funny because the other day I was taking a hike actually in Yosemite Valley, and I found a recording on my phone of the Salon de Analyse Technique in Paris, where I literally gave 2 live presentations. It was about 9 years ago, and I was showing one of my new strategies at the time, which is an old strategy now. And it's amazing, as I was listening myself, it was like listening to a time warp, and I was saying the same things that I'm basically going to be telling you now, and that's because it is true. It never stops. It's evergreen. So what I hope you take away from this presentation are the 7 hacks that I'm going to share with you to successful trading. And it's amazing because when I was listening to this, it was the 7 keys to successful trading. And I 28 years, come on, it all blends. I didn't even remember, but when I was listening to that recording, it was like I was getting goosebumps. All right, so anyway, I've been mentoring, I hate to use the word thousands, we'll just say a lot of traders. I've been calling a live trade room now for nearly 18 years, and I've got some of the top performing strategies on the market. that continue to work to this day. I'm going to show you one of my best of all time and show you how and why it works, as you know. But as you can imagine, I've got so many of users, thousands of users in over 100 plus countries. So when I say I've mentored and coached thousands of traders, it's really not an exaggeration. And I think you already know I'm the backpack trader. So let's get going. Today's agenda, I'm going to talk about the 7 trading hacks that will help you rule the market. Who here wants to rule the market? I hope you all do. Hello, Spain. Taking advantage of key exhaustion levels, knowing the balance of power between buyer and sellers. If you can do these 2 things here, you're going to be better off than 90% of the traders out there. And then I'm going to take you into my trade hacking laboratory. I'm actually going to go into the charts. I've deconstructed one of my favorite strategies, and of course I'm going to have you guess what it is. Some of you may know, and then I'm going to reconstruct it for you step by step and basically teach you how and why it works, taking advantage of these 2 key points, exhaustion levels and knowing the balance of power, and how we're going to use that to our advantage. Sound like a good plan, you guys? All right, I hope so. So let me first tell you about my wife trade. I'm not into trading wives, it's not what you think, but this trade started my career. Could anybody tell me what this chart is that we're looking at here? Does anybody even remember what happened back in 1992? It was a very famous trade, and I'm giving you a second to think about it, but look at this big drop, like falling off a cliff. This was famous, okay? So I'm just going to go right into it. This is the trade that broke the Bank of England. It's actually not exactly the trade. There were several, and it includes several currencies. This was before the euro. Someone, an infamous trader by the name of George Soros, and IH put that in, very good. George Soros actually was shorting the Deutschmark and the British pound. He broke the Bank of England, and I unwittingly had just learned about Head and Shoulders, and I'm not referring to the shampoo. I got a brochure in the mail, was fascinated by trading, and I saw this pattern, and I'm like, that looks like a Head and Shoulders pattern. Maybe it wasn't this exact chart. It might have been a weekly chart. I don't remember. But anyway, I unwittingly sold the British pound against the dollar also. So, you know, we all know what happens. Soros made billions of dollars. I took my few grand and backpacked through Europe. So as a result of that, being a drummer, I picked up some bongos. I was sitting in with street musicians. Here I am performing on the Charles Bridge with my Venezuelan friend. And I went to visit him a year later in Caracas, Venezuela. And within 24 hours, I met the wife who I have been now married to for over 26 years. These are my kids. And I'll let you decide who made the best trade. Soros made billions. I made a wife and an amazing family, and I was hooked on trading. So it worked for me. And it goes to show how important trading is. It's too darn important to get it wrong. So let me ask you guys right now to make a commitment to yourself, no matter where you are with your trading, beginner, intermediate, advanced, maybe losing when you want to be winning, maybe you're at the break-even point and you're almost ready to get on that winning ramp. I want you all to type in that you are now committed to get it right. Is that why you're here? If you type it in and you tell me you're committed, I can hold you accountable. And accountability is huge. More importantly, you can hold yourself accountable. If you start to hold yourself accountable, you'll be amazed at how you can turn these things around. So I've got a lot of people typing in yes. Z, a lot of people don't have their names here, but a lot of you are typing this in. And if you haven't typed it in, then look in the mirror and ask why. Because this is just for you. It's not for me. It's not for anyone. You need to commit if you hope to get it right. So get it right, guys. Come on, just commit to it. All right? So while you're thinking through this, I'm going to show you why and how you can take that commitment and start turning things around for yourself. All right, so I think most of you are typing it in now. Great, let's go. Beginning and still fear to make my first trade. That's okay, but we're going to teach you how to not do that. There are steps to get rid of that fear. Bill Rainey says yes. James says yes. Awesome, guys. All right, so let's get into the 7 trading hacks to rule the market. These are what they are. Take a screenshot, write them down. I'll drill down and show you why these are so important. You don't want to miss any of these. These are all important. If you miss one, you're probably not going to get to that, the reason you're putting yes in the chat box right now. So hack number 1, you have to prove it to yourself. So the trader who's afraid to take the trade, this is going to solve that for you. Hack number 2, the power of the trade plan. We want to run our trading like a business. I'm going to show you how. Number 3, you need a strategy that allows you to dance with the market. You have to learn how to control what you can control, but to surrender what you cannot control. This is very difficult for people, but there are techniques to do this. And once you do this, things start to change for you. Lifestyle. Could you believe that if you trade less, you actually make more? Not only that, but a lot of people are stuck with trying to get their lifestyle to fit their trading. That's a mistake. You want your trading to give you the lifestyle that you've always wanted, that you've always known you deserve for you and your family. Once you realize this, trust me, all these hacks really help. The 2% rule, all right, we'll get into that in a moment. Einstein, I'll give you a piece of advice. We're not going to argue with Einstein. You'll see why when we get there. And then, of course, the 5% art. Notice I didn't say 20% art. All right, there's a reason it's 5%. Very, very important, these hacks. So let's start with the prove it to yourself. This is probably the number 1 most important thing that you have to do, and the number 1 thing that most traders do not do. And it's a shame because there's nothing to stop you from doing it. All right, so you've all heard of Clint Eastwood and his movie, The Good, the Bad, and the Ugly, right? Well, I've changed the title and I've added The Great. The good, the bad, and the ugly, and the great, okay? And that's important to understand what this means. Why is this critical? Because here's the fact of all trading. I don't care how good your strategy is. I don't care how much you typically win. If you're winning 90% of the time, more power to you. There's a random distribution of wins and losses. Nobody wins 100% of the time, and losses could stack up. A 90% winning strategy, which, by the way, very hard to achieve that, and the good news is you don't even need that to be extremely successful, so don't worry about that. But even if you have a 90% winning strategy, there's going to come a time when you're going to lose 10 trades in a row. It's going to happen, for sure. In fact, the worst thing that could happen with trading, no matter how remote it is, probably going to happen at some point. I could tell you stories. 18 years in the trade room, trust me, I got a lot of stories. I don't have a lot of time to tell them all to you now, so I'm going to stick to my agenda. But suffice it to say that you can prove to yourself that despite the ugly, there's a lot of great also. You need to live with a win-loss column. And what do I mean by that? Well, there's a tool. There's a tool. We actually use it. We give it away to our members. It's so important. It's called the UTA, the Ultimate Trade Analyzer. But ultimately, it's a pre-programmed spreadsheet. And we log trades. We start with looking in the past, going through a series of rules and backtesting the trades so that we can live with the win-loss column and experience for ourselves the good and the bad and the ugly, and then the great, and witness the equity curve go up and up despite the ugly. And when you go through that process enough, you start to change. You recalibrate your internals and you start becoming a trader, not a person trying to trade, but an actual trader. And you have to go through this process. This is about proving it to yourself, and you could do it with your money safely parked on the sidelines. So why aren't you all doing it? Good question, isn't it? Why aren't you doing it? Ask yourself that, because there's no reason not to, other than if you don't want to succeed. I think you all want to succeed. So this is hack number 1, and it's critical to your success. See this? Imagine this equity curve as the forest, all right? There's a lot of trees in this forest, every trade, a tree, and you can see, imagine if you started trading with us in the trade room right here. You guys see my mouse moving around right in here? And oops, and you're trading here, and this happens, down, 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 and right when you get to this point, it's like, oh, too much pain, I quit. Imagine that. Well, that's what most people do. Most people wait until the good trades happen, and then they start trading the 2 steps forward. They start trading during the 1 step back, and then they quit and miss the 5 steps forward. But if you had a crystal ball and you knew you could start trading back in here and 10 months later end up here, you'd probably be able to get through a little bit of the doldrums, wouldn't you? A little bit of the ugly. This is the result of learning that win-loss column, the good, the bad, the ugly, the great. And this is what actual trading is. This is a very robust winning trade plan. Notice it's the crude oil 377 tick chart. It's just a chart. There's a lot of things you can trade. But what I'm going to show you today is the exact same chart from today's session using the exact same plan that created this equity curve back in 2015. Imagine that. I only chose this because it's convenient because I already have the graphic made. But wait until you see today. 6 years later, exact same thing, exact same everything. This is what I mean by proving it to yourself. This is what you have to do if you want to succeed. All right? Don't get stuck in the trees without any perception of the forest. It's the forest is where you make your money. And it's okay to sacrifice 1/3 of the trees in your forest if you can grow your forest 2/3 larger as a result. That's where the money is as a trader. Can we all agree? Does anyone disagree? Please type it in. All right, so let's get to the power of the trade plan. The power of the trade plan is like, this is how you achieve what I just showed you. You define a set of rules and then you prove it. And now the rules are defined. Plan your trade, trade your plan. Every single trade is completely planned with a proper strategy. You can see the entry, the stop, the targets. You know what your reward is. You know what your risk is. You even know what your risk-reward ratios are. This is the snippet of a trade. What trade is it? Well, it's this trade. It started here. And you can see, here's the same trade. Here's everything I just showed you, but I was showing you over here. This is when it started back in here. Look at the targets. They're already printed on the chart. Now imagine this at the right edge of the chart, you're making trade decisions. And here it is, days later. This is a swing trade of the pound Aussie, which is a great swing trading Forex pair. Yes, you can trade Forex. This is a trade plan. Still using it to this day, years later. All right, so what do I mean by dance with the market? Well, what I just showed you was a dynamic system, a strategy that's going to adjust and tune itself to live time bar after bar. So as you can see here, and this is another chart of crude oil, here's a long trade, and you can see that the very next bar, it triggers in at the little plus sign, zooms up to a perfect target. It's a small trade, right? I mean, it's basically hitting 2 bars, and then it comes down. That's all the market wanted to give. But look at the next trade. This time it's a short trade, and it's a much larger trade, isn't it? Why? Because it has tuned itself to the current market condition at this very moment. It's dancing with the rhythm of the market. It's not trying to lead the market. It's following the leader. The market is the leader of this great dance. The better off you are, the better able you are to let the market lead you. This is part of one of the other hacks where we're going to surrender some control. You could start using dynamic setups that tune themselves. And look at how perfect that target was before it went up. So you have a small target with a perfect trade, and then it goes down, a short trade with a bigger target, also perfectly tuned before it goes up. When you start employing a dynamic strategy that has the power to dance with the market, you'd be amazed at how things start working out for you. This is what we use to determine proof. All these hacks fit together. So one builds to the next. Another look, you can just see another perfectly tuned trade. All right, so let's get into lifestyle because this is super important. And again, this is something a lot of you may have not thought enough about. Some of you think you got to be all day, all night with your computer. I know people that are Forex traders, particularly that will sleep with their laptop. I'm like, that's a fast recipe for a divorce, isn't it? You don't need to sleep with your laptop. That's just not how you want to trade. It starts with self-assessment. We use a process of elimination, and it's really easy to figure out what we shouldn't trade, actually. When we start thinking about our situation in life, where we are, what we do, how much time we have to trade, what we want to trade, what we don't want, when we want, what if we only want to trade 30 minutes a day? What if we only want to spend 15 minutes a day trading and that's it? Well, you'd get a big thumbs up from me, that's for sure, because I think that's great. An hour or two, but not all day. I mean, really, get a life, please. In fact, let trading give you a life. You don't need to be glued to your computer with corkscrews for eyeballs. No, that's the wrong thing to do. Another thing that's so important is a lot of people are like, yeah, but I got to pay my electricity bill. I got to pay my mortgage. I got to put my kids through school, blah, blah, blah. Does the market care what you need? I mean, really? You're making me yawn here. The market couldn't give a crap what you need. So forget what you need. No one cares, and you shouldn't care. I mean, you should, obviously, but that not when it comes to trading. No, you put the needs of your trading first. Don't put the needs, your personal needs first, and then try to use your trading to accomplish that. It's going to fail. You're going to be a human being trying to trade, and that fails. We have to transform and become traders. There's a big difference. Think about that. Never put your personal needs in front of the needs of your trading. It's a huge mistake. If you put your trading needs first, it won't happen immediately, but if you continue to do that with the right approach and following these hacks and using a great strategy that you've proved to yourself, eventually at the right time, this is a great irony, the trading will take care of your personal needs, but you have to allow yourself to get there. Think like any other business. It takes time to ramp up, doesn't it? You don't just start a business tomorrow and expect the money gods to fill your account with gold shekels. Doesn't work that way, does it? Eventually, though, you work hard, you do it, you stay with your plan, and you get to the point where you increase your income until you cross over, and now your trading will take care of your personal needs. It's a real important concept. And don't try to do it by trading more, because it's such a sad story that happens every day as you follow your trade plan, you put all this work in it, you make some money, and you see that, wow, there's so many great trades that come afterwards. I think I'm going to take another trade. Even though you've hit your goals, even though you're supposed to stop and just come back tomorrow and repeat it, now you trade again, and up that random distribution pops up, takes that profit away from you, and now you're back to zero again, when you could have quit with a winning profit, growing your account. So now what do? Do you take another trade? A lot of people would. What if that loses? Now you're in the hole when you were winning. That puts a pit in your stomach, and it starts causing you to do things that you shouldn't be doing. Again, don't be the person trying to trade. Be the executioner of your trade strategy, the operator of your trade business. It's a different mindset, and you'll see it's an important hack. But the big lesson here is less is more. How is less more? Well, I'll show you with the next few hacks. First of all, think of your trading as a three-legged stool. I know this is a cliche. You've probably heard this metaphor. I've used it for many years. But one leg is your trade method, your strategy. The other leg is your money management, and that's what this is about. The third leg, of course, is your trade psychology, and if you take one of those legs away, the stool topples over, doesn't it? Well, you also have to put that stool on a strong foundation. So that's what I'm hoping to provide for you here. But this particular 2% rule has to do with money management. When you've got a trade plan that you've proven to yourself and you've practiced it enough so you could execute it without making any mistakes, like riding a bike. You don't even have to think about it anymore. When you get to that point, you've earned the rites of passage to start trading real money. Now you're better off than 90% of the traders out there, and you actually have a chance to succeed. Imagine that. Wow, what a concept. The 2% rule says never put more than 2% of your trading capital on any trade, a proven trade plan trade. 2%. That's it. Because then you can withstand the random distribution of wins and losses. Eventually, the winning streak comes, the winners come, you lift your equity, and you get to that point where the 2% now requires you give yourself a raise by moving your finger from the 1 to the 2. And now you put on a second contract. You see how that works? And it grows and grows until you hit your capacity, your maximum size over time. That's running it like a business. That's staying in the game. That's giving yourself the chance to actually succeed. You see how all these hacks fit together? How many of you are doing all these first 5 hacks? Be honest. Type in a yes, type in a no. If you say yes, I'm going to bow down to you, but I'm probably going to then question if you're telling the truth. Tell the truth. Because honestly, most of the traders I talk with are like, wow, I didn't think of it like that. Oh my goodness, if I only did this. So I don't see anyone typing in yes. I see a lot of people typing in no. Good for you. Look, it's okay. You know, there's no problem and there's nothing wrong with realizing where you're at with your trading and what you need to do now next to be successful. Isn't that why we're here? That's what I want to give to you guys. All right, Einstein. Well, he calls compounding the 8th wonder of the world, and that's what this hack is all about, because if you use the 2% rule, if you've proven your plan, you've got something dynamic, so it's going to work all the time. The dancing with the market means that years later, the same plan still works, which is what I'm going to show you, which is what I'm showing you. But in the end, that 2% grows, because as your account grows, so does the 2%. And when you hit that exponential curve, it grows faster and faster, and the rate of growth goes faster. You're going to make more money at the end of the last 2 months of a 2-year trajectory than the first, year and 10 months before that. It's a ramp. So this is a diagram of a trade plan with position sizes being put on, taken off, put on, taken off over a lot of trades. This is from 2019. So look at from October all the way to December. It took, 2 months to even get off the ground. And then it started to go up a little, and it starts ramping up, and there's some drawdown even. But then it really zooms, right? A little ugly, and then some great comes in. A little ugly and some more great. And this is, remember, this is position size growing, growing, growing. This is a Forex chart, and it's trading up to 1,000 lots. And that was the cap. So it took all the way until March to get to the cap, to the biggest size. And then it drew down, and then it came back again. And once you get to here, now look, it just goes straight across because you're not increasing your position size anymore. But you're trading 1,000 lots, growing your account. And by the time you get to the right edge, where you were risking 2%, by the time you get over here, you're probably risking more like 1/10 of 1% because you've hit your cap. You're not increasing your position as your account continues to grow, you see? So a year later, basically, how many of you are going to lose sleep with a 1,000 lot trade if it only represents 1/10 of 1% of your overall capital? I think you will have overcome that problem, the fear problem, don't you think? This is merely meant to illustrate the power of compounding and why this is such an important hack. This falls into the money management leg of the 3-legged stool. How many of you are using a sensible money management plan with your trading attached to a proven trade plan? No one said yes yet, so I'm just going to assume nobody is. And my question to you is, well, now's the time to start, isn't it? That's the question, isn't it? This shows you the same trade plan. The blue line is with not using money management. A single contract starting with a $2,000 account with a really good winning plan. And you can see by the time it gets to the end of the year, or September following year, on the left side, it's gone from 2,000 up to like 8,500. That's huge growth. I mean, that's a great plan, right? If you can make 10% on Wall Street, you have a career. On the right, though, this shows you when you start employing the 2% rule, power of compounding. And the $2,000 would turn into like over $300,000, right? This is meant to illustrate a point. You don't have to duplicate this exactly. You probably never could, but you'll be able to utilize the power of this hack with your trading. And it doesn't matter how long it takes you to get from here to here. If you stay with it, you'll get there. All right, so let's talk about the 5%. This is about the 5% art to trading. A lot of you try to be bigger artists than you should be. And it's really about discretionary trading. It's okay to have a little bit in there because artificial intelligence is only so smart and there are things that your brain are just better at. So one of the things I like to talk about is the key level adjustment insurance policy. And just to put it really succinct, because I want to get into the lab and show you these charts before I run out of time. But I also wanted to spend time with these hacks for you because I think they're super important. But just think of the 5% art as if you have a long trade that's at the entry's at 49, just move the entry up to 51 or 52, right? Get through the 50 cent or the 50 level. There are key psychological barriers on the chart, especially with certain markets. And you've got, you don't need to program that into your software. That's something you could use your brain and just do it. You could hide your stop. Don't put it at 51. Put it at 48, for example. There are other little things like that, working around chart levels and things. Don't get long right below major resistance, for example. Just adjust it a little. So these are things I teach. There are little maneuvers that we do, but we reduce them to mechanical rules also. So it's not like, oh, you got to remember this 5% art. In fact, we reduce that down to more like 1 or 2%. But what I don't want you to do is think you're like, such an artist that your 20% of your decisions are, I don't feel like that's going to work. I think this is going to, this is go long. I think I'm going to get, no. Here, the main reason why that's a bad idea is because you can never quantify your results. You cannot measure your results. You have to be able to get measurable results. Why? Does anyone know why? Because of the first hack. You cannot prove to yourself that your strategy is going to make you money if you cannot get measurable results from enough trades to give you a sample set to give you the proof you need. How many of you have even thought about this? This is critical. This is so important. Measurable results give you the proof you need. When you have the proof, you start to believe. When you believe, you put that foundation under that three-legged stool. Now you have the confidence to be able to take the trade because you know exactly what to do, how to do it, when to do it. You've practiced it, and you've proven to yourself it's going to grow your account and get you to your reason for trading. What is your reason for trading? Have you thought about that? Should be to make money, right? So that you can have the lifestyle. It all fits together. You have to give it conscious thought, or you're just going to overlook it and you're going to shoot from the hip. You're not John Wayne. You're going to miss your target and you're going to lose your money. That's what trading is. All right, so let's get into the quick 7, the taking advantage of key. So these things, I'm going to skip some slides and go straight to the charts and show you this stuff. Rope-a-dope is Muhammad Ali, getting tired. We're going to then come out swinging. These dots show you exhaustion levels. So I was going to ask you guys a pop quiz, but I'm going to skip instead straight to the charts because It's time. Okay, so let's do it. So how many of you know what strategy I'm going to show you? Because I've done this several times. And what is that? All right. So if you think you know, type it in. I'll let you know in a moment. This is today's session. This is crude oil. Notice it's the 377 tick chart. We start at 9 a.m. I showed you something from 6 years ago. This is today. Same chart, same trade plan. I always like to show what happens today so that you guys can see the robustness of how these concepts fit together and how they work. So a quick question for you guys. Can anybody guess what's going to happen next? Like here we are at the right edge of the chart. This is right in front of our start time. Who knows what's going to happen next? Anybody? Is the market going to go up? Is it going to go down? Is it going to go sideways? I mean, it's not the most attractive looking chart, is it? And someone just wrote something very smart. He said, or she said, no one. That's right. No one knows. Because here's the dilemma. Do we have to make trading decisions at the right edge of the chart when no one knows what's going to happen next? That's where we trade from, isn't it? A lot of people look back and go, oh, wow, I could have taken this trade. That looks great. They start dreaming of all the money they could have made because they look back and see all the price action and what they could have done. But then when it comes time to actually doing it, then what, right? Isn't that the dilemma that all traders face? All right, so I skipped through those exhaustion slides, so now I'm going to explain to you what they are. What if you knew when the buyers or the sellers actually became exhausted? Like if the sellers became exhausted, would that give you important information on maybe staying away from shorts and focusing on long trades, for example? Well, the strategy we're talking about starts with the most fundamental ingredient, and that is identifying the key exhaustion levels on the chart. And that's what these dots represent. So like down here, it tells us the sellers have become exhausted. Up here, you can see visually that there's a balance where you got a tug of war back and forth, right? This is a balanced market. It's the worst time to trade. You want to trade when the market's out of balance. That's where you make money, right? So up here, the buyers are tired. Down here, the sellers are tired. There's different degrees of exhaustion, so we need more confirmation, more indicators to help us put this into context. So the next critical ingredient, and this is what I built my career on, is this next thing is so important. It's the crocodile pit in the sand, that moving line in the sand that delineates the balance of power between buyers and sellers, the great tug of war that makes a market, that makes green bars and red bars. And you don't want to get dragged into the crocodile pit. You want to be on the side that's going to pull the hardest, right? So we call that the balance line, and it looks like this. It's also called the signal line. I've called it the trigger line. I've used it in several real successful strategies. So the way it works is when you got the sellers are tired, and now you got a green bar closing above our balance line. Notice it's this moving line. It's very dynamic. Every bar, it's measuring where the balance of power exists. When you have green bars closing above it, you want to focus on long trades. Vice versa with short trades. Okay? Very important. The next ingredient, though, we're going to stack some important, smart things in our favor and then create some rules and then have a calculator, a very important indicator that will take those rules and print trades for us right on the chart. Just like I showed you in those last diagrams where the chart prints based on these concepts. Okay? So the next thing is this amazing indicator down below. It's called the high trend chop indicator. So it tells us some things. It tells us when the market's choppy, like right in here where the dots are, a choppy market. There are rules that will filter out some trades. But most importantly is the high trend part of it. This histogram here is very important, and it simulates what's happening on a chart 5 times slower or 5 times higher, however you want to look at it. So to really understand that, imagine this is a 5-minute chart. This is going to show us the fast trend on a 25-minute chart, right? So if you know anything about trend analysis, you know you got fast trends, intermediate trends, long-term trends. We're interested in the fast trend, but on a slower chart. And so we don't have to look at a 25-minute chart. We could look at the same chart. Got all the information right in front of us, right at a glance. So all these tools make it very easy then to go back, do your testing, and prove to yourself and get those measurable results, you see? So this is the fast trend on a chart 5 times higher. I forgot what 377 times 5 is. You guys can use a calculator or use your noggins and figure that out. But so you understand, and that's going to help corroborate some of our trade setup. So what we're trying to do is stack the odds in our favor so that we know that when we have a trade and the odds are in our favor, then we can apply that to a proven trade plan with start time, stop time, quitting goals, where we take our target, how we move our stop, how we manage the trade. We can take that, apply some rules, and create a trade plan that now we can prove to ourselves will make us money. You see how this all fits? This is the formula, you guys. All right, so this trade plan started today, and I'll show you what happened. So here we are. I took away the histogram just to make some room here, and all of a sudden it prints a long trade. So we may get long here, right? But that has to still trigger in. This is the final piece of the confirmation, is that once you get the setup, a little plus sign above the balance line means long. If you're below the balance line, it means short. All right, so it's a long trade. But it still has to push through a few ticks to get to there. That's the final piece of confirmation, is called price action confirmation. And that will eliminate some trades. So we get the setup, it doesn't trigger in. In fact, we get tired buyers, the bars start closing below, and now we get a short trade. So look at when you click on the bar, you get the entire trade right here. This is right edge of the chart trading. You know your entry. The goal is to go to target 2. Our first step of the way is to get to target 1. And if we get to target 1, we're going to move our stop, which is up here at these exhaustion dots, down. We're going to lock in 1 tick and be at break even, and even cover the cost of our commission. So we're going to try to aggressively get to a break even position as quickly and as fast as we can. So that's the basic trade plan. If the price goes down, you trigger in. So here you're placing your order. You don't have to think. It's a trade plan. You've proven it. You place your order. It's a bracket order. If the entry gets triggered, it activates the targets and stops that are attached to each other so that when one hits, the other one cancels. And you trade it like a template. And you could place it, you could practice placing, canceling until you can do it really good. This is what a sim account is used for, right? And once you've got it down, you have your trade plan, you got your trade, you place your order. Well, this was the first trade of today's session. Today's session. The same chart that I've showed you all along from years ago. This is what I mean, because it can dance with the market. It's evergreen. It never stops working. Doesn't mean you won't have a loss. You will lose. We know that, but who cares? A few bad trees fall, but the forest grows. Well, look what happened. Today it grew. How do I know? Well, I know what happened. It went down, and look at how it hit target 1. Well, look at the stop. The stop's tracking. This is one of the improvements of this strategy. And it moves down, and now you can see it's locked in. It's 1 tick. You have a risk-free position. Can you take profit here? Yeah, you can. And in some charts, we will. But this plan calls for target 2 and target 3. You can go with target 3 also if you trade multiple positions. Now, these are highly tuned, accurate trades. How are they tuned? Because of everything I just showed you. There's an algorithm that this takes these patterns and is able to project like a crystal ball. Go back to here. We can see where the targets are. That's our crystal ball. The odds are it will hit it. Won't hit it 100% of the time, but it will hit it most of the time, and that's enough for us to make money if we manage our money correctly. The 2% rule, right? Okay, so this is what happened today. There it is. There it is, hitting target 2. Cha-ching, there's your money. There's your goal. You've hit your, what we call the power of quitting goal. This empowers you to quit trading for the day. Yeah, you got to finish managing the trade. If you have more positions, the trailer's starting to trail the balance line. You might have a position going to target 2 or target 3, and it stabs down and hits target 3. Look at, I can't write this. Look how inventive, how perfectly it hit it. I mean, it's so perfect, you have to check and make sure you get filled. I mean, you better be quick to mark it out if you didn't, because you hit your target. So target 1 was 23 cents. That's $230 a contract. It's $10 per penny with crude oil per contract. Target 3, $310, 31 cents. And that all happened in a matter of 8 minutes. And the stop's still pushing down. You might have a third position trailing. And then it stops out. And that's it. And that's all she wrote. I mean, look at how perfect the target was. This is the crystal ball. This is the dancing with the market. This is why this is an evergreen strategy, because it is able to tune itself to market conditions. The next trade will be a different size. We're not interested in this trade, even though it came up and broke even, but you'll just see, I just want to show you how much smaller it is, because the market changed. Hit that target 1 and went straight down again. It's dancing with the market. Let me show you a few more examples, then I'll tell you what this is. Does anyone know what this is? Has anyone guessed yet? Because this is not a new strategy. This is a proven old strategy that just continues to stand the test of time. Now, I know, let me ask you this. If you wouldn't mind typing in what you're interested in. Do you trade futures? Do you trade Forex? Do you trade equities, options, swing trade, day trade? Let me know, because I'm going to show you all of it, but I'm just curious what you're interested in here, because I see some Forex, I see futures, I see equities. Yeah, everything. I know there's going to be everything. Options, swing. Yeah, all right, so a little bit of everything, and that's great. Well, guess what? This is an evergreen strategy. It adjusts, and I'm going to now show you everything. And I'm going to start with Forex. This is a swing trade plan. I use this with my, I have a Forex alert service where I send out swing trades, my greatest hits, and guess what my greatest hits are? They're from this strategy. So this is one of the charts we use, the US Swiss, and this was the most current trade here. Well, this was the current trade a few days ago. Look at how it hit a target, perfect. Might have even missed by a pip or two. I think it did. We just quickly have to mark it out. And like I said, we don't fight over a pip or two on a big trade like this. But what I love about this chart is that you only have to check it it's 5 minutes a day, and you can look at like a dozen charts. 5 to 10 minutes a day. The trade's there or it isn't. And then you move on. And you place your trades, you manage your trades, you cancel some trades, and then you go make dinner. Maybe you check it in the morning, move your stock if there's a spike, which happens. That's it. Talk about backpack trader style. Trading less, making more. This is the ultimate lifestyle way to trade. So this was the last trade called in the signal service 4 days ago. Well, look at today. This is happening right now, right as we speak. Target 1 was good for 98 pips. The stop is going to move down to break even at the end of today. We wait for the bar to close. That's it. In fact, you don't have to wait, but that's when the indicator will move the stop. In fact, you see the dashed line there? When I was preparing to show you this today, I drew that dashed line because this bar was up above it, and I was like, well, that's the target we're trying to get to, and then it just got there. So you could use this on a lot of pairs, but because I'm running out of time, I'm just going to kind of show you the big picture and just show you basically, you know, some of these perfect targets. I mean, you just keep going back. This is when I was showing it last time I did a presentation. Actually, this was back in October. It wasn't even last time. It was months ago. I've done many since. And this is just one chart that I've marked up. But just notice the size of the trades and how each one is perfectly tuned before the market turns the other direction. And sometimes we overshoot it, but then we have our trailing stop. Here's a losing trade. Losing trades happen, but you get the point, right? So this is Forex, swing trading. You don't have to use a daily chart, but to me, it's one of the best ways to trade. There's this special 4-hour chart And this is a trade plan that comes with the strategy. This is a custom chart. It only uses the 8 p.m. and the, the 4 p.m. and the 8 p.m. bar, and that's it. But it's just amazing. This gives you a lot more trades. The targets are more customized. This is the current trade. It just gained a few hours ago 106 pips. Now it's at break even, and we're continuing to trail. So with Forex, you could scale out. So there's a question if this is for TradeStation only. And you know what? I can't believe I haven't told you this yet. No, it's not for TradeStation only. Yeah, I prefer TradeStation personally. TradeStation is not a Forex broker, but I take these trades and then I place them with my Forex broker. But this works on NinjaTrader 7 and 8. It works on MT4, and it works on Thinkorswim. And I'll show you some examples. All right, let me, hopefully I won't run out of time. In fact, I see the clock is a-ticking. So I'm going to start flying through the rest of this just to cover stuff. So let's look at equities and options, because this is truly amazing. In fact, let's start with the spider. This is such a fantastic option to trade. Look, there's over 29 million shares today. This is the most current trade. You could see it just blasted through target 1. I did the math on this. It was over $15. You don't want to buy 100 shares of the spider at $408 a share. You want to buy slightly in the money call options. You would have made 63% gains just to target 1 in the last few weeks, right? These are daily charts. You can use other charts too, like I said. Check out this trade. Look at how it adjusted itself before it bounced up again. This trade almost got to target 1. This is actually a losing trade. Fairly accurate, not accurate enough. But if you keep going back, you just see so much. I mean, let me just show you really quick, because I marked this up back when I showed this months ago, this one trade here. I mean, look at these percentages. This is simple call options, 37%, 65%, 112%, 121%. Before it went down, trailer. If you can make 10% of the year, you have a career on Wall Street. These are your percentage gains on one single trade. This works so well with equities and options. It's just, I can't even tell you. I'm showing you. Let me just quickly show you one more of the cues, because this is what we all just lived through. This big, huge drop off here, well, this was COVID. This was COVID hitting, and I'm also introducing you a new indicator that I give as a bonus on this special deal. This is your trend mode indicator. There are different ways to use a strategy. Some of you will really like trend mode, and it's really simple. You only go short when the line is red. You only go long when the line is blue. That's it. Well, this short trade showed up here. We got the last part of the move with the whole COVID drop-off. There was another short up here, but it's a setup that I don't have turned on. If I turn it on, you'd see a trade that happened right here. So you have 3 different setups. I don't have time to teach you what they are. But what I do want to show you is what's happened since this sell-off a year ago that we all experienced. We're all living through this dreadful thing called COVID now, but hopefully we're at the tail end of it. But I didn't even mark it up. I actually did on my home computer. I'm traveling now. I'm actually the backpack trader today. I'm on location with my laptop, so I had to make this quickly for you. But I just want you to take a look. Each one of these targets are where you could peel off options. And look at all these trades. Every single one is winning. Every single one. There's a losing trade here, but it is not a losing trade. Anyone know why? Because the line is blue. We don't go short. So the trend mode indicator filters out what would have been a losing trade. Instead, we get another winning trade and another winning trade. A trade that never triggers in. That's just nothing. And then a winning trade. We get our first losing trade here out of all those trades, and then we come right back with a strong winner. And another winner. And another winner. Another loser. Finally. And again, if I were to turn on the white trade, let me just show you. You come down, you go to where it says white trade, and you set it to true. Now you can use the actual trade that's called the counterpunch, and this gives you the short trade, you see? But I like it when you just focus on the green trade, because the green trade is so good and it's so easy that when I teach the strategy, I try to teach you one setup at a time. So here's the current trade. I mean, it's going through the roof here. It already blasted through all its targets in like 2 days. All right. So that's the cues. I'll quickly show you today's session in the Dow E-minis for my futures traders. Starts at 8:30 Central. That's 9:30 New York when the markets open. We hit our goals with the very first trade. This happens like so common. It took 5 minutes. A single contract made $160. If you traded 3 contracts, target 2, target 3, trail, you made more money than the cost of this strategy. Literally, in one trade. You own it for life. You guys should be excited because this is way underpriced. But I have a great webinar special for you, and I want to jump right over. Just want to show you what one of my favorite markets are. This is unleaded gas. Has anyone ever traded unleaded gas futures? This is one of the hidden sleeper markets most of you don't think about. When I was setting this up today, this happened. This is when, like right before I logged in, but the session starts back around 9 in the morning. So where's 9 in the morning? Right here. 8:54, 9, you're getting in right in here, and it hit its goals. Look at the perfect target 3 again, different market, perfect. And in one trade, it's finished with all its goals in hand. And just to give you the sense of the size of these trades, I marked up these current trades that were happening. $218, $294, $294, $394, just like that. This will be recorded, I believe. So I'm going to jump in. If you can wait just a couple minutes, I only have a few minutes left. I'm going to show you. Let me get back to my slides, and I'll tell you how you can get this. This is the Counterpunch Express 2, in case you don't know. So let me just jump quickly to the good stuff. These are hundreds and hundreds of testimonials I've gotten over the years. You just have to take my word for it. Most of you could easily find me. Remember, you want to be the CEO of your own business. So this is what you're going to get. Everything I just showed you, all the indicators, all the trade tracking, there's all new enhanced stuff. The control panel that shows you the trades, the high trend chop filter that I showed you, the fast trend on the slow chart, and the chop filter, which I didn't show you how it works. Proven, done for you strategy. It comes with everything, including some of the best training I've ever done. The trend mode indicator, the red line, blue line, red goes short, blue goes long. That's a free bonus. That's a $197 bonus. I throw it in there for free. And of course, done for you trade plans. Trade plans that have already been proven, that already work. I've been showing them to you. You get those too. You also get, so first of all, not only do you get all of that, I got some bonuses. I've had people tell me, members, that I should be charging 12 grand. And the truth is $997 would be a fair price that anybody should be able to just slap their credit card, win a few trades, and pay it off in no time. But for you today, I've cut that in half. It's only $497, guys. You get the Counterpunch Express 2. Everything I showed you, all the training, which you've barely even heard, but now you see what I'm about because I just went through this presentation. www.backpacktrader.com/join. Very easy. Type that into your browser. Anna, I don't know if you could put that in, but sure, this is like the cost of one winning trade. So, are we done? Do I have like 1 or 2 more minutes to talk to them about their bonuses?
1 or 2 minutes, sure, why not?
Thank you, Anna. So I'll go really fast. I have a live trade room. It's 4 days a week, Monday through Thursday. It starts at 9:30 New York time. You guys, you get it. That comes with. You get to learn this in live time with me or one of my other coaches. There's no better way to learn. You watch it, you see it, you learn it in real time. That's another look at the crude oil report. Here's the same look on NinjaTrader. I have a look of, here's a look on Thinkorswim. I marked up this Tesla chart. You can see it looks the same, the exhaustion dots, the trailers, the big gains on options. I just wanted to show you it works great on Thinkorswim. You also get the Ultimate Trade Analyzer. If you remember, I showed you that pre-programmed spreadsheet, which I think is one of the most important tools you could use to become successful. It's worth 197 bucks. I give it to you for free. I want you to use it, and this is going to help you as much as anything. Just this itself is worth the price of admission. You're going to be able to spit out curves from your trade logs, etc. I just showed you the YM today. Well, this is a curve from it like 5 years ago. I showed it you winning in 5 minutes today, the exact same plan. You get everything for $4.97, literally the cost of one trade, maybe two, and you own it for life. This is the biggest no-brainer. If you guys aren't falling over yourselves to get what I just showed you, I don't know what's going to help you, because I've been using this and I still use this, and you can look at my YouTube channel and see me using it with the crude oil report every week. I record those sessions live. I've been doing it for years. This is the real deal. And it's basically 90% off of the value that you get. When you add up the value of all these things, it comes out to 3,500 bucks, and you're paying like one winning trade. A cup of coffee a day for a month or two. It's nothing. I mean, this is a joke. It's so inexpensive. I can only give this to the first 50 because this price is going up. Get it now before the price goes up. Backpacktrader.com/join. And with that, there's a couple other bonuses you could see in here that I forgot to mention. Multi-computer license, like you could use this on more than one computer. You get the multi-platform license where you can use this on all the platforms it works. You don't have to choose one. You could use TradeStation and MT4. You could use NinjaTrader and Thinkers, whatever. We're not going to hold you back. And then I throw in my 2 ebooks, which takes the 7 hacks and actually expands it to the 12 powers to successful trading. And this is the all-important, no-brainer guide. It's a step-by-step guide to trading success. You make these 2 ebooks your trading religion. You combine it with the 7 hacks and this strategy, and you guys are going to be on your way. So again, TradeStation, NinjaTrader 7 and 8, MT4, and Thinkorswim. Works on all of them. You get access to all of them. www.backpacktrader.com/join. And the last thing I'll say is if you want to contact me, if you have any questions, anything that I did not answer, you can easily find me, Troy@backpacktrader.com. Troy@backpacktrader.com.
Welcome to the presentation, everybody. And Anna, thank you for the opportunity. We do Forex and futures. Futures mostly. I added Forex in the past many years, but we focus on the futures. The presentation title is not an exaggeration because with the presentation, throughout the presentation, you will understand a few things. You will see and you will know what I do exactly and how we do it, and how to achieve the 1,000 ticks easily, really easily throughout the month. My name is Simon Jousef, and the website is thetraderinstitute.com. Today I'm not going to be selling anything. Whatever you want, it's available on the website. We have special offers, but I'm not going to be touching that. Simply because we offer trials. If you go to contact us, free trials, we can give you free trials. We offer a live trade room and also a 24 hours Telegram channel for trading calls. For example, I called the RTY, the Russell, just now before the presentation, and it did go nicely for about 50, 60 ticks. And I don't know whomever took it, they're still in it. That being said, let's move on quickly. I started back in early 2000s with Forex, but switched to futures soon after. I realized it was more organized, but I started with something called the bid and ask ladder, the tape. In 2005, I spent 6 months to try and understand it. I was one of the pioneers trying to understand and focusing on the numbers in the market. I always realized technical indicators are not the best. You are 50-50 at best. So I developed a few things, including the price magnet indicator, end of buying, end of selling, unfinished business, capping, traps, point of control, etc. But I improved. It was really tough to follow the numbers. It was not easy to teach. So it's minimized now to a very simple line, which I will show you throughout the presentation. These are my presentation back in the days, 15, 16, 20 years ago. I had presentations done in Ontario, Toronto area. And I'm losing, hold on one second, folks. Just a second. I am losing some action. Let me just disconnect. Okay. So these are my old pictures in the days. This is in 2012, I think, or 2013. I did Colorado, Denver presentation, live presentation, because I used to do live presentations before. It's been about now 10 years that I am doing everything online. This is one of the members that joined me back in 2014, I think. He says, I've been trading for nearly 25 years. Most of my career was in Forex. I was able to make enough income and to quit my job and trade for a living. Then the subprime crisis happened. You folks remember in 2008, and completely erased all my capitals, and I had accumulated. I decided to become a day trader, and then he joined me at that time. I tried several rooms and purchased multiple indicators. Nothing worked until I discovered Simon's room in 2014. Simon consistently produces 1,000 picks each month. Now, this is really not an exaggeration. I understand the title sounds cheesy, but it is not. I will explain and I will show you. We offer trading education, right? Comprehensive, detailed trading education. And if I show you the back office, this is the back office for any member to join us, right? You will see, hold on. You will see a list of courses starting from level 1, level 2, level 3, etc. You have for example, level 3. Level 3 itself, it contains 7 videos explaining the volume profile, because my method is based on volume and volume profile and numbers. So if you pay attention, if you bear with me, I'll explain more things. Live trading room, I have 3 days a week, right? Monday, today I closed the room at 11, but we continue on Telegram. You see Telegram, we have multiple channels, indices, currencies, oil, metals, Bitcoins I don't do, but I have energies, which oil and energies as well. So, and we have elite members channel where students pay attention and also help each other and also chat. I have my own indicators that I developed throughout the years, and they are within the membership. And as I said, trade signals, including Forex and CFDs. If you're trading a CFD, you're not in the States, you can trade CFDs. I also have CFDs too, which I sometimes trade too. Okay, here's the core of the methodology. Anticipate, confirm, execute. Remember this, anticipate, confirm, execute. It's easy to remember. However, nothing happens unless you anticipate it. If you don't anticipate a direction or a trade, you don't want to trade it. You have to anticipate it. But in most cases, anticipation is enough for most traders, which is not it's not the case with us. You have to confirm. For example, just a quick example to show you. I called the RTY short, the Russell short, right? Just now, do you see this magenta line? I called it before I started. That magenta line was my confirmation, which is something I developed throughout the years. Okay, and then execution. Execution is also important. How do we trade, and how many contracts, and how I manage my trades. So let's go back. Let's go to the charts. Let me show you a couple of things that you need to understand. The charts are frozen now. Because I disconnected the data feed. But if you look at the right-hand side of this chart, what do you see? You see volume profile that has different colors, and I can basically sharpen or smoothen the edges, as you see, and you see edges, you see bellies, you see valleys, you see different colors as well. This gives me levels of continuation. We call them, pay attention to this, continuation zones, rejection zones. It gives me levels of, we call them suction tubes, where the market, if it goes through them, is going to go fast. It gives me an idea of where the stop loss is, right? It's all in details, and I've been teaching this for a very long time. It's very, very accurate. Now, look at the magenta lines. You see those magenta lines? You see those magenta lines? You don't see them flashing because I disconnected the data feed, but these magenta lines are embedded volume in the market, heavy volume embedded inside the market. So this will give me an idea of where the buyers and sellers are. Okay? It's very important. So keep in mind, I'm looking at anticipate, confirm, execute. So, and also, these are not the only instrument I trade. I will show you what do we look at. First of all, this is the CFDs and Forex markets. This is a picture of taken from the side computer that I call out trades from. You'll see there's NAS 100, which is the NASDAQ, US 30, which is the Dow, SPX, which is the ES, and then Russell, oil, Brent oil, net gas, gold, silver, USD, Swiss franc, USD Canadian, Euro, US, and all the currencies. That is number one. And then on the main chart, we have, which you see now, we look at Canadian, pound, yen, Swiss franc, euro, as you see, nat gas, crude, NASDAQ, Russell, ES, etc. So all these I'm looking at. So what I mean by it's not hard to get 1,000 ticks, it's because I'm looking at all those. Keep in mind, with this strategy, you can get an idea of what percentage of your trade is going to be accurate. So I focus on 75% to 80% accuracy, which means if I'm looking at 15 different instruments and the NASDAQ has not given me something solid in terms of trading and good stop loss, I'm going to pass. I'm going to look at the euro. Okay, so this is how it works. We said we do anticipate, confirm, execute. ACE, anticipate, confirm, execute. I showed you earlier the volume profile, and the volume profile gives me levels of, we call them continuation zones, C, versus another continuation zone that might look different color, different shape, but it's continuation, right? And in between, you have these rejection zones, R. Now, let me remove these and show you an example, a very common example that everybody should be familiar with, right? The example is you are looking to, let's say, short the market. Let me see if that's a good example, because I have already three trades today, called them, and they are still running in the market. Okay, let's look at shorting the market. Let's say you are looking at the Russell, and Russell is going down, and you want to short it from, let's say you have 3 levels. That is maybe for somebody who just uses technical indicators, and you have 3 levels. One level is here. I'm sorry, why did I do a triangle? One level is here, the other level is here, and the other level is here. Now, you wait for the market to retrace up, and this is your level, and it took maybe took you an hour and a half, 2 hours to wait for this, and you have to trade it because you waited enough, okay? And you took it short, goes up, takes your stop, said, okay, no problem, I'll double or nothing, or double here. So you take it short again here, another stop out. Now you have 2 stop losses, and it started coming down. You say, okay, it's going to come down. There's no, like, it for sure is going to come down. You take it again short here, you get stopped out. Finally, it goes up. You just get tired of it. You don't want to risk anymore. You're scared. It bounces and comes back down and gives you that 400 ticks move, which is very common for us, by the way, getting 400 ticks, 500 ticks, 300 ticks. Hasn't been that common in the past couple of weeks. The markets have been very, very difficult, but we are up over 700 ticks for the month of April so far. Now this is you already lost. I mean, not you. If you're trading this kind, you already lost 3 trades and you quit for the day. You can't. You're devastated. Whatever. You don't want to risk it anymore. Let me show you how easy and how visible it is once you learn the volume profile that I teach in details. I told you this is the volume profile that I look at. Look at the levels here, okay, and it increases and decreases according to how many how much data you put in, as you see. Okay, it's all detailed. It's all visual. You'll understand it with time once you join. But let's go and show you. Where is my here? No, not this one. This one. Let's assume that you are now an expert with volume profile the way I teach it, and you have levels here and a level here, and there's a level right here. You have levels that we call them continuation, and we have levels in between, we call them rejection. Now, continuation means what? Means you don't touch the market unless you are in it. You don't go against it. So for me, if the market goes up here, I want to trade it short, right? My first short level is going to be from this rejection area. But let's go and assume that it's going to go up. It's going up, it's going up, it's going up. And your first level is here. I showed you the lines before. Are you going to take it short from here? Knowing that you are inside a continuation zone, most likely, if you go against it, it's going to stop you out. The market is going to stop you out. So no, you're not going to take this short. It's going up. Are you going to take it short here? You say, maybe it's close to the rejection. Here's the thing. What about your stop loss? Folks, have you thought about stop losses? Stops? Let me interrupt a second and let me show you what I called on the RTY. Just now, it happened here, 12:38 p.m. Okay, my presentation started at 1:15, so it was before I started my presentation. I said RTY stops at 22:42. You notice in my trade call, first thing I did, I mentioned my stop loss. It's key. When I find a stop loss, then I will call a trade. If I don't find a stop loss, I'm not going to call a trade randomly. You can sit there and be bored. I don't care. I'm not there to entertain you. Because if I don't find a stop loss on the RTY, I'm going to go to the pound. I'm going to go to the yen. I'm going to go to the ES. I'm going to go to the gold, crude, and I will find that trade. So if I go to the chart, although they're not moving now because I disconnected, do you see my 22.42 is here? This is my stop loss. This is the entry. You see this magenta line, which I will touch on soon. Magenta line is part of my confirmation, right? So I found my stop loss, then I set entries from 38 or better. Here it's typed, so I have the entry, and I have the time associated with it, and I have the details. I wasn't filled because I was rushing. I did not fill me, but if you see the elites, the member says, "Don't worry, Simon, we got filled," which is okay. I was just multitasking. I wasn't filled, but it's already down about 70, 80 ticks in their favor. So going back, what about your stops? If this is the rejection area, pay attention to this, please, folks. This is the rejection area, but this rejection doesn't mean that it's going to reject from here. It means there's an opportunity to reject from here, to reject from here, to reject from here. But what is the ultimate rejection? The ultimate rejection is the entrance into the next level. So this is your last point of defense. You understand, folks? Please pay attention. This is your last point of defense. So if I want to trade, this is my stop loss, just above this line. You understand? So why don't I wait for the market, which usually happens, to come up here, closest to my stop loss, closest. And here I would, am I trading? I'm not trading yet. Here, when the market gets here, I'm looking at a few things. I'm looking at my volume profile on a smaller chart to confirm. This is the 60-minute. Maybe I'm looking at a 987 tick chart. See 987 tick chart. I see the rejection zone, and I want to see what at that time. I want to see. Let me remove this blue line so you know that's my blue line manual. I want to see my magenta lines, which is my SAL indicator, Simon's attraction levels, popping in, shooting. Like these are the live market movers entries. These are institutions. These are heavy players in the market. And I filtered out. How do I filter it out? If you go to, this is a Sierra chart. If you go to Simon's attraction levels, you can go up to 50. You can go up to 50 up to 50 levels that you see where the market makers have their volume or waiting areas or waiting entries, pending entries. They could be pending, they could be live, but once I get the market coming to my level of here, entry, I want to see action. I want to see my magenta lines showing up. I want to see my magenta line showing up here. Once I see that confirmation, once I see that action, I will call it short. All right. Now my stop loss is here. So I would have probably, let's say 20 tick stop, 20 tick stop, 20 tick stop. Now that being said, my first target is not random as well. My first target usually is the first hiccup against me. So the first hiccup against me is going to be around the entrance into the next continuation zone. So I'll say, okay, take your first target here. Now, how do we trade? How do we trade? My trade calls are based on 3 contracts. Okay, my trade calls based on 3 contracts. First target, which is T1, is usually on the first 2 contracts. So if I made 20 ticks on the first target, 20 ticks, that means on 2 contracts times 2. I just made 40 ticks profit. And then we leave a runner. Stop loss then will be moved accordingly. I'll show you. Now, let's say the market goes in our favor, right? Let's go back and let's clean the charts. The market goes in our favor. Okay, first target out. The stop loss is here. Once we get into this continuation zone, folks, I can move my stop loss, but it's still early. I want my runner to breathe, right? I want my runner to go down here. Maybe it's going to act like this and then continue down. I want my runner to get into another continuation zone before I move my stop loss, maybe here. Therefore, you can learn how to scalp using this methodology. It's really not hard to scalp using this methodology. But If I'm scalping, I cannot type my entries, my exits, because by the time I type it, it's gone. So I look at swing trades for my members. During the room hours, yeah, I tell them where to buy, where to sell. But for my trade calls, which is easy, that's why the title says no thinking involved. I will give you the entry, the profit targets 1 and 2, and I will chase it with the stop loss. We call them smart stops. Nothing is random in this business. If if you are using numbers and if you are using the math behind it, okay, nothing is random. So that's how we look at the market. So anticipating the market, I was anticipating the short. Why I was anticipating the short? Because I was looking at my volume profile. Is this enough to trade? Anticipation? No. Anticipation alone is not enough. Confirmation is key. Confirmation is where you see the market makers pulling triggers, supporting that level. First of all, the level that I chose or we choose are not random. Nothing is random. Okay, I'll show you another example. Today, this is April 8th, right? Today is April 8th. April 8th here. First thing in the morning at 8:44 a.m. I said pound yen support. Pound yen support. You see how this magenta line popped up on the pound yen? I said support for a long at market or better. Yeah, I see 38 of my students trade Forex and they saw it. And then I went there, I said pound yen stops at 49,900. Then some people missed it and hovered there. I said, okay, currencies, futures, pound yen 150.2. Take target one at 150.2, and then I said 150 entry. I mean, let me explain. This is the pound yen. All right. This is the trade call right at the bottom, right here. 150 area or better. Stop loss 149.9, which was here, right? Did go for about 40, 50 ticks initially. We got first target, and now we are hoping for a runner. So basically, folks, I gave them, before anything, I gave them the snapshot of what I'm looking at. I gave them an entry, first target, and the stops. Again, I told them about the pound as well. Pound as well was a long. We took the pound. Pound, we pay attention to this, please. Pound is not only in the futures market, but also Forex. So pound US and pound, both of them long. See, we are long from the bottom. I don't know where the pound is now because my charts have no data. Let me check on the side because it is in the profit still. But we got first target anyway on the pound US and the pound futures. Okay. So the way we look at the market, folks, when I say 1,000 ticks, if you follow all my trades, really, it's not hard to get this 1,000 ticks. It's been now, I think, multiple months in a row where we are averaging over 2,000 ticks. Why? These are the instruments that I look at: the Nasdaq, the Dow. This is CFD. Let me show you the other one. This is the futures: Nasdaq, Russell, ES, some currencies as well, Euro, gold. And these are the people chatting here, right here with me, like students live. This is a live session. This is a picture of a live session from this morning. Let's assume I have a trade on the YM, the Dow, but I don't have a stop loss. I'm not going to take it. I'm not going to call it. Why? I told you, folks, I am looking at trades that are 75% or 80% or higher in accuracy. Okay, that's why every 10 trades you will expect 2 stop outs. I'm talking about full stop outs, all 3 contracts. Some trades will give me first target, We move the stop loss to break even, and then it gets stopped out, which is very common. It's been very common in the past 2 weeks because of the market hesitation. That's not a stop out. That's a profitable trade. If we make 60 ticks on the first target and then stop, the runner is with a 20 tick risk and it gets stopped out, that's not a stop out. That's a 40 tick profit overall on the trade. Point is, folks, I don't have to settle with anything that is I'm not comfortable with. Anything under 75%, I just tell my students we have support and resistance here. I'm not touching it. If you guys want to do something about it, a lot of students I have, because I deal with advanced members, most of my students are traders already. I don't trade, I don't train people who don't know how to trade. I don't, because they can learn for free. Why do they have to pay me? I trade advanced traders, people who've been in the market for a while, but they're struggling to be consistent. They're struggling to win. So when I show them how to confirm trades, okay, they sit back and they say, you know what? We have one issue, which is we trade randomly. Now that's taken. That we are now more stable. Stability is everything, folks. Sitting on your hand and doing nothing is part of being successful. We call it hub. This is a very common phrase. If you join our community, it's a very, very funny community we have, and you can join it. The word hub, H-U-B, hands under the bun. It's very common. When there's nothing, there's nothing. I'm not going to force it. Why? Because, there's the next session. There's the next hour. There's always something happening in the near future. I don't touch anything that is less than 75% accurate. Okay? And this is on the future side. Look at the Forex and the CFDs. Some of you maybe don't know what CFDs are, maybe because in the States it's not allowed, but all over the world, people trading the NAS 100, the SPX 500, and the CFD market, which is part of the spot FX, silver, gold in the FX market, right? Oil in the FX market, which is US oil, which is the CFD as well. And that's the strategy in a nutshell. Now, I told you about our back office. We have if you join us, we have multiple levels of education. We have a couple of levels of entries if you join us. Again, I'm not selling anything today. Why? Because simply, folks, I am inviting you to join our trials. If you go to our website, first of all, okay, this is the main website. Okay, this is me, this is the website, and read on. There is testimonials. You'll enjoy the testimonials. All these people, you will see them. You will see them here. Most of them are here in this channel with me as members, right? Which is the elite members. You will see them. You can talk to them. Ralph, Tom, Mark, David, Barbara, Vinud, Dijon, or Dion, Chris. So you will see them. They've been with me for many years. Some of them have been with me since 2005. Yeah, 2004, 2005. Then one thing you need to do is to go to this education page. Okay? The first 3 videos are very important. The main video, this one is similar to what I'm presenting now. But second video, it's a 50-minute video. It explains every single detail about our indicators, my indicators, the power lines, the magenta lines that you saw, which I will just go back and teach as well. But there's this third video called Adult ADD and How It Manifests Itself in Traders. Folks, this is done for us in 2014, back in 2014 by Dr. Kenneth Reed. He's very good at what he does. This video, unless you're getting married today, seriously, you have to watch it. This is not done by myself. This is done for us back in 2014. But you have to watch it. It will change your life in terms of how do you look at trading. It helped me a lot. It helped me a lot also seeing myself, even with my own kids, knowing how I behave sometimes and why I have a certain level of ADD. I was marked very good in terms of ADD. My ADD is very low compared to most traders, but yet still it helped me a lot. I told you about the indicators. If I right click, let me just connect again if I can. Let me see what's happening with the Russell. If I connect again and look at the Russell, this was my trade call, by the way, 22.42 my stop loss, right? And the Russell is down now 103 ticks in favor, just to let you know. And I called it just before I got in at here. All right? No, that wasn't here. It was here. This was my stop loss, entry 38 or better. Now, if I'm looking at my indicators, main indicator is Simon's attraction level, sell indicator. I have 25. You see 25? 25 levels out of 50 are printing on this chart, which are the volume. You see look at the magenta lines right on the chart. You see these magenta lines? Sometimes they will show up. Look, I have a support right here. You see it? This is Russell, and you see magenta line was here and just disappeared. It tells you a lot about the intention of the market. It tells you a lot. There's intention. There's volume here, folks. These are the heaviest 25 levels in the market. Imagine how important this level is. These are market makers. This is not something done by myself. These are market makers. Did you see how this magenta line just showed up here and now it's pulled? So this is not something to ignore. If you don't know where the market makers are taking the market, or they want to take it to, or where there's intention to where is their reversal intention, I think you should look at it, because market makers are the one, or market movers are the one who you should be following. Technical indicators might help, but they don't work as good. Anything that is not volume based, really, it's not as good. Why? Because volume is what moves the market. Again, market moves by buyers and sellers. Market doesn't move because you have a line on the chart, correct? So the support in this level here is giving me an idea that there is support and there's a magenta line, and you see how the market has reacted to it. And if you noticed, once the market got to this level, to 22, 22, 26, you notice another magenta line that was getting thicker, right? So that is what the strategy is all about, folks. It's very simple, very easy, but it takes time to understand. It's not something that you could just take it and learn it. Now, if you don't want to learn, if you don't want to, that's fine. You could just follow the trade signals. Now, again, I'm not selling anything. As I mentioned, you just go to the website, thetraderinstitute.com, contact us, and you have free trial inquiry. You can email us. We will just need to know who you are and what is the best way for us to help you out, and join 2 weeks free. It's 2 weeks free trials that will give you access to all the channels here and access to our live trade room. Okay, for 2 weeks you can follow the trades, and you can ask questions, you can learn, and you can understand. But you need to ask for a trial. We cannot just give it to you like that. You have to ask for it. We don't know if you're interested or not, right? You have to show us that you are interested. So I showed you what we trade and how we trade it. A lot of people go through this, psychology issues. Okay, how do you deal with psychology versus my accurate trade calls? I wish I had taken this trade. Why did I panic and I exit too early? I don't like trading currencies. My margin doesn't allow me to swing trade, meaning you don't want to keep it overnight. You have to deal with it, folks. If I'm giving you 1,000 ticks at least per month in trade calls, imagine trade calls. I'm not trading for you. You have to take that trade, right? I'm giving you that. And if you don't believe me, join the trial. I might, it might not be for you. You might say, you know what, it's not for me. But there are reasons why some people, some traders initially find it hard to get the same results or to get this 1,000 ticks a month. Why? Because they are focused on one instrument. They say, I'm only trading the ES. I'm only trading the NASDAQ. Yeah, but is it working? Well, I don't know. I don't know if it's working. Again, I'm not making fun of everybody, folks, but this is the reality. If you do not look at different markets, if you don't build that basket mentality where you have different opportunities, the presenter before me, I don't know his name, Troy maybe, he was amazing in terms of showing you all these trades in terms of different instruments, different. Yes, that's how it's supposed to be. The market is moving. It doesn't matter what instrument is moving as long as you benefit from it, right? You cannot be married to one instrument. If you're in the States, I know you cannot trade CFDs. That's fine. Trade Forex. Mix it between Forex and futures. It's been now, my trade calls for the past 4 or 5 days have more Forex than futures. Why? Because the futures markets have been crappy. So some of you, they say, okay, the stop loss is too big. It's 50 tick stop. Although I don't call, sometimes I would call a 50 tick stop, but my goal is like 1,000 ticks profit. You don't want to take it. Well, think about this one. Why don't you take it on a micro trade? Why don't you take it on something that is less than $5 or $10 per tick? Okay, I can't hold for overnight. Why can't you? Maybe because your margin, as I said, then you have to think about it or do something about it where you could have switch to Forex. Forex does not, margin does not increase. I can't let a trade retrace against me. Well, then take first targets or learn how to hold and don't be intimidated by the market retracing a little bit, right? So all these factors you have to keep in mind once you join me in a trial. If I call a trade on the yen, and I do have a trade on the yen right now, let me erase this. I do have a trade waiting on the yen to actually come back down a little bit for me to call it US yen, actually to call it long, or yen futures to call it short. I do have that. Problem is, if you're not trading the yen, you're going to miss out. You are going to miss. So that's why it's very important, folks, to look at the reality of this business. The reality is, if you're not looking at different instruments, okay, if you're not looking at NASDAQ, Russell, ES, YM, crude, euro, Aussie, Swiss franc, yen, pound, you are missing a lot. Better yet, some people do Forex, futures, options, and stocks. But these are the heavily involved full-time traders. The methodology stays. Okay, let me see if I have questions. My indicators work on Sierra charts, but you can trade any other platform that you choose. Let me look at some of the questions. Hey Simon, I got the trial a couple of weeks ago, and you finished the week with 715 ticks. Yes, thank you, Brian. It was a bad week, I thought. Wow. I don't mind if every week was bad. Very impressed at your accuracy. Thank you so much. A couple of questions. Do you offer trials? Do you offer payment plans? Yes, we do, but it's not me. You have to talk to Charles. You talk to Daryl, please. Email me if you want. How do we ask for the trial? I just showed you. If you go to the website, go to contact us, right? It's right there. Any questions? Hold on. How many trades? I would say 10 a week, approximately. 10 a week, yeah. 10 trades a week, I call. It depends. Any questions, folks? Join the trial, please. I love the ACE strategy. How many students? How many students do not execute or replicate? Joe, try. It depends. Some students still need some help, but usually, for example, here I said I missed the RTY. I was not filled. I told them I missed it by 5 ticks. But if you see, Hermes here says no, we got filled. So it depends on the member. It's not me, but the idea behind the 2 weeks trial is that, folks, you join the 2 weeks and follow my trade calls. You don't have to trade them live, trade them on sim or mark them. Overall, they are marked. If you look at the Telegram, and I'm gonna call it now. I'm gonna exit now soon, Anna. Just the next presenter. I don't want to take from his time. Sierra, yeah. For now, it's just Sierra. But you see the the date and the time stamp on it, so you can follow the trades that way. Looking forward to having you in our trials. Contact us. Go to the contact. Go to email sales or email Simon or email info. Any of these will give you the trials.
All right, folks. Late good afternoon, early good morning, depending upon where you're at. My name's Ray Burchett. I've been at this since 1983. In 97, I co-founded Local Knowledge and started to help traders develop online, help pioneer that. And then we had the impetus for that was the E-mini. So I've worked with many traders and been through a lot of market tumult and also great trading opportunity. And what I want to share with you today is gaining an objective perspective on trader development. It comes down to this slow brain, fast brain. And we have to stay ahead of price movement. We have a slow brain because we don't trust ourselves. We have a fast brain when we trust ourselves. You know, people think you can do brain games and exercises. Well, those are great. That increasing the neuroplasticity of the brain through that is great once you trust yourself. But we're conditioned to not look at knowledge and competency gaps, that they're a bad thing. And also, when we hear the word trust and truth for that matter, they're familiar to us, so we think we know everything that there is to know about those words, so we stop listening. We go off to our memory bank and play whatever we have recorded to tell ourselves how smart we are, and we miss out on gaining a better understanding. And that's what we need to do. In reality, we have a thimble and we need bucketfuls of knowledge and understanding for the power and construction of trust. That's what's going to speed up our brain. So I'm going to take you through a few things here to paint that picture a little bit clearer. But if you listen carefully and through the end, I promise you, you're going to see the biggest challenges that are keeping you from the outcomes desired. Why you're struggling, why you're not getting the performance that you want. So again, let's just recognize the dynamics of the trading environment. I went into the pit in 1983 and traded into 2004 before I left the floor. And you know, why did I leave the floor? Because everything was going electronic. And I'd had a front row seat to it as co-founder of Local Knowledge, and I wanted to get ahead of it. And I also got involved in another company that I created outside of trading to speeding up the brain because of what I had figured out. And in full disclosure, that takes the majority of my time and effort right now. So with technology, and trading's always at the tip of the spear, right, to get that edge. What does technology do? It keeps increasing the volume and speed of information and events. It's a mathematical certainty. So we may think that we're good at any point in time, but the reality of it is every day that passes, we're at greater risk of falling behind because of the lag between human improvement and machine advancement. To put that in perspective, Gallup has studied employee engagement since 2000. And basically over the last 20 years, the average increase has been 1.3%. In other words, engaged employees that are already behaving proactively, they've improved 1.3%. It's a good comparison because traders have to behave proactively or they're dead in the water. So over the last 20 years, 1.3% works out to a little bit better than 28%. What do you think technology has done over the last 20 years? I guarantee you it's way more than 1.3% a year. So we have to figure out how to speed up our brain, even if we're not trading, if we're going to remain competitive. And then just over the last 6-7 months, a little bit longer if we're really paying attention, but just tremendous increase in online censorship, media manipulation of information, and then events fueled by advancing technology. Right now, 5G increasing 4G internet speed by 100x to power the Internet of Things. Keep in mind, 4G was just a 10x increased internet speed, 5G 100x. And that may not seem like something that's going to impact you that much, but understand what the Internet of Things is. It's radio frequency ID technology. That's going to allow for the generation of thousands and thousands, if not tens of thousands, of additional unique user data points that's going to be harvested and then used to profile and target us for financial and political gain. We're just going to get bombarded by information that much more. So these are known things, and this massive increased information and events, if we don't speed up the brain, even if we're not trading, we're going to get overwhelmed. So stick with me. When I talk about truth and trust, resist that temptation to play whatever you have in your memory bank and stick with me. Again, we've got to go from a thimble to a bucketful of understanding for the power and construction of trust. So the first thing that we have, actually it's the second. The first is thinking we know more than we do and can control things that we can't. And that's what happens when we tell ourselves we know everything there is to know about truth and trust. The second thing is human nature, path of least resistance, right? If we believe we can control things that we can't, know things that we don't, hey, that's that much less work we have to do. And then on top of it, we're conditioned that it's bad to acknowledge gaps. How often do you see an influencer or an elected official or someone reporting news or whatever, take responsibility? Say, you know what, I didn't see that, I missed that, or I'm working to get better on this, right? We don't get that. We get excuses, we get blame, we get personal attacks. In other words, we're conditioned that it's bad to acknowledge gaps, it's weakness. In reality, when we see a gap, it's an opportunity to gain competitive advantage. Does everybody get that? You see a gap, an opportunity to get better, we want to be all over that. That's how we gain advantage. That's how we gain an edge. But denial is an accepted practice, making sure we stay dumb and stupid. Now, you're thinking to yourself, yep, I'm smart, I know this, I'm above this, And, you know, I have to be as a trader, and you're right, but what we don't appreciate is how prevalent it is and what that impact is on our development. Just look at public education. Accepted practice to advance a student that's not reading, writing, or doing the math at their grade level, year after year after year. Makes the student feel better, makes the parents feel better, makes the teachers and the teachers union feel better, makes the principal and the school look better, makes the school district look better, makes the Board of Education look better, and it's not creating any problems for the elected officials that are responsible for oversight, right? Don't rock the boat. What's the consequences of that? You keep pushing a kid through, you deprive them of their dignity, their independence. They're screwed. Best case scenario, they're counting on a government check. Worst case scenario, I'll leave it to your imagination. But that's happening all the time, and nobody cares. If you say, Ray, well, nobody cares, that's not true. Well, then, one simple question: why hasn't our Congress passed a law that said, hey, teachers, you can't promote a kid unless they're competent at their grade level? So the big thing here is how prevalent it is to be in denial about failure. Again, it's the path of least resistance. And this is how we get to a slow brain. The way it works in trading and trader development, that trading is promoted as the path of least resistance to financial independence. Markets either go up or down. How hard can it be? And I've got these powerful systems, software, trading rooms to alert me when to buy or sell. And the only thing you see are the success stories out there. They don't talk about the people who struggle and fail or why, right? So it's far from full disclosure, as you would say. You know, I began my life as a CPA with Arthur Andersen. And full disclosure and consistent with GAAP, generally accepted accounting principles that are updated through financial accounting standards bulletins, right? That's a huge, huge deal. We thrive on full disclosure. So it's a little bit different in the trading area. Yes, there's risk statements and everything else. So all of this contributes to slow brain. So what ends up happening in trading, we start sim trading before we're ready. You know, we really need to have a foundation of strategy, the analytical ability supporting that strategy and execution logic. We need to have that down pat before we start sim trading, but we don't. We just go in and start sim and have some success. And then we start to trade live and everything changes. Because what happens, once we start trading live, fear of loss creeps in. We can't lose money when we're sim trading. And what that fear does, it creates uncertainty. And that fear creates a little bit more uncertainty each day, because we can't put our hand on exactly why we're successful, because we don't have a foundation. And then it gets to a point where that fear has blurred our awareness so much that we can't keep up with the market, and we're falling further and further behind. And I'm sure that's a familiar experience for some, if not many of you. So the big takeaway here is we don't appreciate how we've been conditioned to ignore our weaknesses, that it's okay to be in denial, to blame, to make excuses, and that there's dynamics out there that are just making it that much harder for our success. Now, here's the good news. We can overcome all of that and get to a fast brain. And so we need to understand what makes a trader successful. They have strong conviction for who, what, and when to trust, starting with themselves. They have no doubt they've put themselves in the best position to anticipate and take advantage of price movement. They know what they want to do, why they want to do it, how they're going to do it. All their energy is available to develop awareness for when to enter and exit the market. That clarity gives them the trust, which is the energy to wait for the market to align with strategy and the strong conviction to execute as intended. That's the biggest challenge. Those are the two biggest behaviors any trader has to overcome. And so when we trust, man, our brain works really fast. I want you to think about when you've really been on the ball. Your mind is just ahead of everything. You're connecting one dot after the next. Everything's clicking like that. There's no distraction and conflict. Why? Because you know who, what, and when to trust. You've got the best information, the best of who you can be at your fingertips, and you're applying it at the blink of an eye. That's what it means to trust. And so what creates that is superior awareness. And what superior awareness is doing, how it's keeping you ahead, it's projecting expectations tightly aligned with events as they occur. You see details in high definition. You're able to make precise adjustments, securing the outcomes desired. Think about an athlete after a great game. They're interviewed and they talk about seeing things in slow motion, having all the time to make the play. Why? Projected expectations tightly aligned with events as they occur. They saw details in high def, slow motion, able to make the play, precise adjustments, securing outcomes desired. That's the science. That's what really happens. And what I just described, I have no doubt you've experienced it, but nowhere near the frequency that you would like to. Why? Because you don't know how to trigger peak performance. You don't know the beliefs and behaviors that develop and support high intuitive function. If you did, you certainly wouldn't be listening to anything here today. You'd be killing it. You'd be working a couple hours a day and living life on your terms with great joy and happiness. And the only thing that's keeping you from that is a deeper understanding for the power and construction of trust. So I want to talk about the brain. The brain is the only mechanism capable of integrating the mind, heart, and gut to know who, what, and when to trust. Listen carefully. The mind controls the analysis, decision, action cycle. The heart maintains harmony between the physical and spiritual worlds, and the gut keeps us connected to instinct, keeping us safe. That's three elements that have to be integrated in a nanosecond. The brain is the only thing that can do that. Technology cannot. And it is trust, not technology, that determines how fast and well the brain filters, processes, and applies information. And here's the killer. Trust erodes proportionately to increasing information and events unless brain function improves fast enough to keep up. So we have all of this increasing information and events driven by 5G, increasing 4G by 100x to power the Internet of Things. Combine that with online censorship, which really keeps us from getting to the truth, makes it that much harder because there aren't readily available objective discussions. And then we have media misinformation. And again, you guys can all come up with your own examples. So it's a real battle out there, plus the belief that, hey, we don't want to admit our weaknesses, that's cool. We want to take that path of least resistance. So there's a lot for traders to clean up. So to get to where you want to go, you have to understand how your learning process is making the most, maximizing your talent, time, effort, and resources. Then you're going to be all in. You're going to be fully committed. But if you don't take the time to have the clarity for how your path is going to get you to where you want to go, you're never going to commit. It's not going to be a priority. You're going to be walking on eggshells instead of being all in. So you need to be able to draw straight lines to cause and effect. Hey, if I do this, it's going to get me this. But here's another killer breakdown by traders. Most of the time, they don't even consider who they're up against in the market. They don't break down the enemy's strengths and weaknesses. They don't look at their own strengths and weaknesses and put them up against the enemy. That's the most basic thing you have to do to come up with a strategy. And then that strategy determines the intelligence you need, how you're going to structure your analytical process and execution logic. Most traders never do that. To be successful as a trader, if you're following a system, software in a trading room, the ones that are successful, the ones that have torn that down to the bone. They understand it as if they created it themselves. That's where you have to do what you have to do to trust yourself. Because if you don't understand it at that level, there's always going to be a lag in the decision-making process. The only way to get that lag out, to keep up with the market, is to be able to draw straight lines to everything. That's pretty tough to do. Now, another way to get there is to start from scratch. And that's what we do with traders. We start at that very foundational level. And I'll talk more about that in a minute. Second thing you have to do is you have to consistently work your process to earn the feedback guiding improvement. This is another real challenge for traders. They're all over the map. Something doesn't work, or they don't have the patience for it. They jump to something else. They never stay with one thing. Now remember, we have no control over the opportunities the market's going to provide to learn and earn. So it may take a while. But the good news is there's plenty of stuff to develop early on to fill that void while we're waiting for the market to provide opportunity. And then the last thing, you have to have best practices. That's information management. How you're going to maintain that high awareness to stay ahead of price movement. Those take time to develop. It's achieved through the observation validation cycle. So there's all of these things that most traders don't even consider. They don't understand what really determines how fast and well the brain filters, processes, and applies information. They really don't understand what superior awareness is and how it's achieved. And then it triggers peak performance. And again, what's peak performance doing? It's put the best of who we can be at our fingertips. It's organized our accumulated skill, knowledge, and experience and made it fully accessible. Right? We've done all of this work. Why can't we have full access to it all the time because we don't understand the science. Nobody ever taught it to us. They've overweighted functional instruction at the expense of strengthening the behaviors that cause the brain to filter, process, and apply information most effectively. That's what has to change. And the cool thing about peak performance, it validates the beliefs and behaviors responsible for our success. You know, it makes us feel really good. We hit the mark. We brought our full potential out. And so we want more of that. And when we understand how it happens, the beliefs and behaviors it validates, we have that more energy to see things sooner and make more out of them the next time. The problem is we don't understand the beliefs and behaviors responsible for peak performance, so we really don't understand what we're validating, so we struggle to build and earn trust. We struggle to improve brain fast enough to keep up with this increasing information and events. So I want you to think of dominoes. You know, dominoes have an incredible amplification power. When you push over a domino, it can knock down something 1.5 times its size and weight. So that amplifies out pretty quick. And that's what we have to think about for trader development. We've got to start down at that very bottom, that you're making the most out of your time, talent, effort, and resources. That happens when you have a scientific understanding for how improvement and performance are best directed and supported. Can draw straight lines to how you're maximizing your talent, time, effort, and resources. And so that's what we do at Trust First. We give you that scientific understanding so you can trust yourself. It leaves no doubt that you're maximizing talent, time, effort, and resources. When that happens, you can fully commit to trader development. You're precisely targeted. You have high sensitivity for improvement. You're seeing and filling the gaps. You've got tangible understanding for how you put yourself in the best position to anticipate and take advantage of price movement. You're satisfying what I call the golden rule, only trading when you're certain to stay confident in a strategy, committed to waiting for market alignment. That means you know what you want to do, why you want to do it, how you're going to do it. All your energy is available to develop awareness for when to enter and exit the market. That's the best place we can put ourselves in. But it requires work. And even before that, it requires seeing the gaps in your own trader development, taking the time to really understand why you're struggling, why you're not getting the outcomes you desire. So the development steps, scientific understanding for how you're best directing and supporting improvement performance. You've got to build that knowledge foundation, basic strategy, analytical process for both technical and fundamental analysis. And you have to understand your execution logic. And then you've got to develop best practices, information management that's going to keep you fully aware. And so all that happens through the observation validation cycle. So people always want to know, all right, well, how fast, how long is it going to take me to develop as a trader? Well, this is a projection development path based on my experience going back to 1983. You got to spend your first 4 weeks really understanding how you're best directing and supporting improvement performance. In other words, you have to understand how you're strengthening those foundational behaviors, causing the brain to filter, process, and apply information most effectively. And that's what's going to make you targeted. That's what's going to give you high sensitivity for the gaps, your preparedness. And when you have that, then development becomes really efficient because now you can keep leading yourself to the work that matters most and preparing to do it best. So that's the first 4 weeks. Then the next 20 weeks, 5 months, you're going to build that foundation, the basic strategy, analytical ability, and execution logic. And after 6 months, you're going to have the awareness, the trust, you'll have done the work to earn it to begin to sim trade. In other words, you'll know what it means to wait for the market to align and execute as intended. You will have the trust for your strategy that you don't want to give up the advantage it provides by not waiting and not executing as intended. And then sometime after week 25, could be as early as week 31 or 32, you'll be ready for live trading. But the more effort you put into preparing yourself for sim trading, and think about it as developing the beliefs and behaviors, making the most out of your talent, time, effort, and resources, the less time you'll spend in sim, the less risk you're going to be at for developing bad habits. The more successful you're going to be. Lincoln said if he had an hour, or if he had 6 hours to chop down a tree, he'd spend 4 hours sharpening his axe. You have the rest of your life to trade. But it's going to be a short-lived proposition unless you understand the foundation that you have to put in place. And even if you're still trying to figure out if trading is for you, you still need to speed up your brain in everything you do away from trading, whatever you're doing professionally. You know, just think about the time you spend chasing versus keeping up. Right now in a 4G world, you know, most people, if they're chasing 40 ahead 60, they're happy. Well, that ratio 40-60 lets you know how much you trust yourself and those you're interacting with. Think about it. If you trusted, your ratio would be like at 595 or 1090 because everything's flying. You have all the information you need. You go to folks, you get what you want. People don't hesitate accepting your good counsel. Remember, that's the hallmark of a professional. Information flows to and through us. Without that happening, we don't have any value. So even if you're undecided at trading, you need to understand how to speed this up to remain effective in the 5G world. So what I want to do is open this up for questions, and then I'll tell you about our program in a few minutes. But let me look at the question panel here. There's been a bunch that have been put up. So let me pull this down. Okay, so besides liking the presentation, does anybody have any questions, thoughts, comments? I left a lot of time on this. I still have about 15 minutes left. So this is your time to really ask all those questions that you wanted to know about trader development, but never asked before. It's anonymous. Nobody's going to, know. I mean, Anna's going to see the question panel and I'm going to see it, but I'm not going to call out anybody's name. But I can share some comments from clients, customers. I had one client that had been trading, I think, almost 12 years. He'd been trading in the grains over at the Board of Trade. And he said, I felt it was like Legos. I had all the pieces. Now I know how to snap them together. In other words, all of the components are familiar to you. The problem is you just don't understand them well enough and the relationships between them to put it all together. And so what we really teach people how to do is take apart, rebuild, and add horsepower to the cognitive engine that optimizes decision making and execution, then tune it to their needs. And I know that sounds incredibly complex, but I've been doing this since 2009 for traders and have it broken down to a real tight process. It takes about 40 hours over 4 months, but the bulk of the work, the first 20 hours, is done over the first 4 weeks. At the end of that 4-week period, you've learned how to take apart, rebuild, add horsepower to that engine. The next 20 weeks, or I should say 12 weeks after that, you're learning through a reflection cycle how to tune it to your specific needs. But you're getting immediate benefit right away by learning how to take back control. And by that, I mean stay focused on what's most relevant to you and have high sensitivity for preparedness. So again, you guys are capable of way more than you think you are. And without understanding high intuitive function, that's why you're blind to it. Remember, asked, do you have to stop trading? Absolutely not. Absolutely not. I've had more than half of my clients are successful traders who came in and wanted to do more. And so the basic training gave them the logic, the understanding to do that. Are there people whose makeup should prevent them from trading? In other words, trading isn't for everyone, true or false? That's absolutely true. Someone that's risk adverse or someone who is not willing to do the work absolutely should not trade. It's not for everybody. And here's the thing, as an educator, you know, people come to my site and they say, well, you know, you don't put up how much money you've made or this, that, or the other. And I said, look, the only thing someone coming to my site should concern themselves with is how much I can teach them and how valuable that knowledge is. And you can read the customer comments to discern that for yourself. But here's the thing. On my advanced side of the trading, which I'll get to in a minute, I'm teaching a process. I'm not giving trade recommendations. I'm using examples for education purposes, because here's the thing that you have to keep in mind when you're working with an educator. They don't know how you're capitalized. They don't know your risk tolerance. They don't know your experience. They don't know your supporting environment. They don't know your expectations. Those are all essential elements to comment on risk specific to the individual. So what I'm doing is I'm building a foundation that's applicable to any trader. Great path if they're starting out, great way to get squared away if they're struggling, great measure for someone who's already trading to see the gaps they need to fill to get to a better place of where they want to go. So if anyone's ready to start that path, I'm doing an all-day trading this Saturday, basic training from 8 until 9, from 8 a.m. till 5 p.m. Central on Saturday. And you'll also get access, you have access to basic training for a full year, the on-demand learning modules. And people go through the training 3 or 4 times. I've had people go through it 3 or 4 times live with me online and then come to Chicago for live training. That's how powerful this stuff is. So that's this Saturday. And so the big thing is it's going to take away that scientific understanding for how you're best directing and supporting improvement performance. You're going to understand the behaviors that you need to strengthen to make your brain get through information as fast as possible, as best as possible to achieve superior awareness. You'll understand what peak performance is and how to trigger it. And that's when we really start accelerating improvement. And then a week from Saturday, I'm doing advanced training. And that's going to be from 9 until 4 in the afternoon. And I'll take you through a basic strategy, putting the retail trader at advantage over institution high freak fair value. You'll learn how a handful of highly correlated tools forecast price movement, proprietary calculation, projecting the path prices expected to follow. And I'm going to show you that right now. Here's the 30-minute in the ES. These green horizontal lines, I did the math on these over a year ago. And this is a process that I created back in 1997 for projecting the path prices expected to follow. Play the Wayback Machine here. If you look at the right side, you can just see how they consistently frame the market. This is incredibly powerful, especially when the market's trading new contract highs. That's why I created it. I was having a hell of a time in the Great Bull. I just didn't feel comfortable. So I figured this out, and I put together some of my best years trading ever. Yes, traveling, will have access to a recording of Saturday's course. Yes, I'm going to record it. And you'll also have access to the on-demand learning modules that break it down. And the same thing the following Saturday when I do the advanced training. So I'm just going to put this out there, and then still I'll take questions. So if you purchase basic training for this Saturday, you're going to have access to the training this Saturday. You'll have also access to advanced training the following Saturday. And I'm also going to give you a free month of advanced training. I sell that by the month, $145 a month. And you can start that whenever you want, just as long as it's no later than October 1st of this year. So for $697, you get basic training and advanced training. And if you sign up before the end of today, I'll add a second month of advanced training. That's another $145 savings. So this is the best thing you can do for yourself, even if you decide not to trade. You know, if you're still checking out trading, this is going to give you a great understanding of what you're in for. And it'll give you the clarity to decide yes or no. Spending $697 for that clarity, plus taking away the knowledge to take apart, rebuild, add horsepower to, and fine-tune the cognitive engine is a great deal. So I can't encourage you guys enough to take advantage. You go to my website is trust1st.com. Click on store and sign in, and just purchase basic training. I'll know everyone who purchases before midnight tonight. And you'll get a second month of advanced training for free. An active trader says, if we purchase and can't do all Saturday due to commitments, do we need to finish before the following Saturday? No. No, they're two different subject matters. This Saturday is about speeding up the brain, getting a fast brain in the context of trader development. And then the following Saturday is the functional stuff, building that foundation, supporting strategy, analysis, and execution logic. And the other thing about advanced training is I reinforce that with my evening chart book, daily briefing, and Sunday evening review. You can see that down here. This is all part of the 145. I do a daily briefing from 6 to 6:30 every morning, Monday through Friday, reinforcing strategy, analysis. There's both a technical and fundamental briefing. Every evening, I send out my chart book and market recap, which reinforces everything I teach. It takes me about 2 hours to put this together every night. And then Sunday, I do my evening review, 7:30 to 8 p.m. We look back, look forward, more time for Q&A. So you're with me live 6 out of 7 days a week. If you can't make these live online sessions, they're recorded. They're in your learner's dashboard. So again, very user-friendly. Go to Trust First. You can read the customer comments. When you go into the store, you can see the reviews for the programs. And so I'm really looking forward to Saturday. It is a fast-paced day, but you will take away so much. You'll be so excited about the path you can travel. Anxiety is going to go way, way down because you're going to see where everything's at. You're going to know what to do and how to get there. And then the following Saturday, it's going to drop even more as we get into the stuff at the functional level, the specifics on strategy, analytics, and execution. So does anybody have any other thoughts, comments, questions? I know I'm coming up here on my time. Expect Anna will pop in here any second.
Yeah, I'm here. Ray, can we please double check the link trust1st.com because I wasn't able to open the website. Just double check.
Yeah, I'm going to go to it right now. There it is, trust1st.com.
Okay, great. Probably it was just on my end. And we have question. If we purchase training and can't do all of Saturday due to commitments, do we need to finish before following Saturday?
Yeah, and again, no, they're separate. This Saturday is separate from next Saturday. This Saturday is focused on the brain and understanding how to develop high intuitive function, which gets us to that superior awareness, making peak performance repeatable. And then the following Saturday is the advanced training, which focuses on strategy, analysis, and execution. So when you come to Trust First, go up here and click on Store and Sign In, and that takes you to the store. And so you're going to want to purchase basic training. And like I said, that's going to get you access to advanced training for the following Saturday and for a month that you get to start on the month you choose. But I'll know who purchased, so I'll be able to keep track of that for everybody. So the big thing is get started. Like I said, especially if you're still trying to figure out if trading's for you, put the time into this. And again, that, basically $700 you're going to spend, you're going to take great benefit out of that basic training into everything else that you do. And Anna, I apologize that I couldn't change my schedule for you earlier today.
No worries. Thank you so much, Ray.
Well, thank you for having me, and thank you to everyone that made the time to listen. Again, you can contact me through my website. Just click on contact here. And if you go to About, you can also schedule a free consult. And under About, you can click on customer comments. That's where you'll see all the customer comments. And then, or you can go to the reviews in the store. This will take you to the reviews for basic training. So you can get there that way too. And just please note to post a review. These are all people that completed the training, have to complete the training to post a review. All right, I appreciate everybody considering. I look forward to having you with me on Saturday. It's going to be a great day. So is the following Saturday. So shoot me an email with any questions or schedule a time for a call.